Okay, so please go through that video of trend analysis because it is important. And we have discussed many setups based on trend, how to follow the trend, how to take trade in direction of the trend. Uh, why do we take trades in direction of trend? Because it increases the probability. So if we add multi-time frame analysis to trend, then it can give us more better trades which have higher probability and faster moves in our favor. So that is importance of trend and multi-time frame analysis. And force should be added to it. How to do that, we are going to discuss in today's session. So today's objective for workshop is integration of how to integrate uh, trend, force, and higher time frame bias, and how to learn strategies for consistent and profitable trading. And then real world applications. I have shared some trades. So we'll discuss what was the trade taken and why that trade was taken. We'll cover about trend analysis, which is already covered, but we'll in short cover it again. And you can go through that video. It is around 3 hours duration. Uh, that will be very good. Uh, again, uh, if you go to that video and watch it again, it will be very important video. If we see the direct trend is up, and if we look to buy on retracement, it gives us much better chances of success as compared to taking trade for this. If the trend is against us and we want to buy at bottom, feeling that it will break this and continue to move higher, it has lesser probability. So following the trend is important because most of the time what happens, it can break out but again come below this and hit the stop loss. That is important. So understand the trend and take trades in direction of the trend. Trends are very important in decision making. Then force measurement. So assessing trade quality by measuring the force behind price movement is important. How can we assess the force of trend? We can assess it by size of the candles. If the candle size is increasing or decreasing, that will give us some clues about force. And how much is the volume when prices are going in direction of the trend? How much is the volume when prices are going against current trend? So whether it is a pullback or whether it is a impulse, so that will be understood by force. And then we have to add higher time frame bias. So when we use higher time frame bias, that weekly is up, daily is up, so 75-minute is coming down with weak force, then it is likely to go up in strong force. That will give us better chances of having a successful trade with rapid results. So we have to add higher time frame bias as well, and we are going to cover these things today. We are going to cover these things. And understanding the trend is important. We have discussed this in detail over 3 hours session. And whatever time we give for understanding the trend, it is less. The better you understand the trend, better you will be in your trading. Prices can never move in this direction upwards or one way down. How do they move? They always move up and down. So prices will go like this. They will go like this. They cannot go up like this. So if prices go like this, what do we have to understand? Whether this force is stronger or this force is stronger. When upward move is stronger and downward move is weak. So upward move is called as impulse, downward move is called as pullback. So when the prices are trending up move will be strong and down move will be weak. Up move will be strong and down move will be weak. Initially, what happens in trend is prices, if the trend has just reversed from down move, prices will go up and there will be a deep retracement. This retracement can be more than 50 to 60%. Sometimes it can be 70%. So from this bottom to this top, it can come down below 50% most of the time. 60 to 75%. That is a good retracement after first push. Then what happens? Prices come down in a pullback and again they start moving higher. So again there should be strong force, and next time retracement again should be weak. So this weak retracement sometimes comes up to 50%, sometimes up to 60%, but very deep retracements don't come if the force is strong. And gradually it starts moving higher and higher, and then up move increases the speed and down move speed reduces. The fall will not be more than 50%. It can be up to 30%, 40%, and 20%. After that, rapid up move happens and the trend ends. This is one schematic. There are different schematics present. You can go through your charts and see how the prices move. But it does not move upward like this fall and this recovery, V-shaped recovery, it is called. This V-shaped recovery is very less and it is less than 20%. And there is no trading opportunity in such recoveries. So most of the time when downtrend reverses with up move and gives retracement, that is the time when we can look for opportunity to buy. First or second time, there are good opportunities to buy. And later on, prices can go in fast rapid up moves. Similarly, for down move, prices do not fall rapidly, they go up and then mostly they fall, recover, and then fall again. Or they go up, go sideways, fall, create red candle, again they create bullish candles, and then second time they create red candle and then they fall rapidly. But in my method, what I do is if candle color changes to red, I will exit. Even though it is not a signal to short, but it is better to exit at this time instead of waiting for the prices to go in red color second time. Most of the time it will show green color, but sometimes if it does not show green color, it will fall rapidly. The trend will continue down. This happens in those stocks which have some bad news associated after this. So it's better to exit without waiting for candle color to change to green. So trend is a general direction of market over a specific period, and we understand trend by higher high as uptrend and lower low as lower high, lower lows as downtrend, higher high, higher low as uptrend. And there is a sideways trend. So these three trends are important. Range bound markets are also very important to understand, because if we don't understand range bound markets, then we may make big losses in that market. And why does the trend matter? Because increase the probability of success is increased when we trade in direction of the trend, and we can avoid fighting momentum, because if the momentum is on downside and we are bullish, what will happen? It can go up slowly and it can fall rapidly. I had shared one example, one book. I had shared some text from a book. In that book, what he had explained was the bias of that person was bullish. He knew that prices are going to rise. After some rise, he exited his position and he shorted because he felt that prices will fall down for some retracement. There was a retracement like this and he had some profits. But immediately what happened, because the trend was up, prices went up and he had big losses. He made 10,000, but he lost 60,000 because he went short here and he could not exit in time. So, as the trend was very forceful, he made losses of $60,000. So, this is example from some book, and this is what I am saying, that we should avoid fighting the momentum. If our bias is bullish, don't take bearish trades because there will be a pullback. Let it be. It will pull back and it will come up again. If you want to trade this pullback, what will happen? You will lose lot of money. You will not be able to hold on to this trade which you have bought here, and you will not be able to buy again at this level. You will lose here. So lot of money is lost because we are fighting the momentum and we want to capture all small swings. So this is very important to understand, that trend will increase the probability of success. Don't trade against the direction of trend and don't fight the momentum. Then, is there any question about trend? Does anyone want to ask anything?
Sir, how
Okay.
to differentiate between a temporary retracement and reversal of trend? Means whether it's a downturn or whether it's just a temporary retracement before upswing.
So if you have seen my tape reading, I have made it as a color coded. Green color means candles are moving high. When retracement happens, even then the color is green. Prices go up, they come down, go up, they come down. When prices are coming down in a retracement, normally the candle size of downfall is small. That I will show with the force candles. So if prices are in uptrend, the downfall will be slow with smaller size of candles. The candles will be overlapping each other and volume will be less as compared to up moving candles. So this is called as pullback. When the candle size increases on downside and it breaks some important level. If previous swing low is broken, that is one important level, or a buying area is broken, that is very important level, then that shows that prices are in uh, the impulse is also increasing on downside. So we cannot understand unless the level is broken. We can get that information only when level is broken. We cannot understand at this level that from here prices will go down in impulse when it is going on for first time. What we want to know that whether this is a top or it will keep on moving higher and create new top. This is not possible for us to understand whether this will be a top or not. But what we can understand that when a important level is broken, that this was important top and we should exit because our trailing stop loss is hit. And after this, we should not look for buying opportunities immediately. We should wait. So impulse and pullback. Pullback is with smaller candles and lower volumes. When this pullback increases in candle size, then this becomes a strong pullback or a weak impulse. And if it breaks below previous important level, then this will become a strong downward impulse, which indicates that trend is changing. This is not a just a pullback, it is strong impulse on downside.
Sir,
Okay?
hello, sir.
Yes, sir.
Sir, which is the most important time frame to decide trend?
Which is the most important time frame to decide trend depends on what we are going to do. If we are in investors, then monthly and weekly are very important. If we are traders, then daily chart is very important. And if we are taking intraday trades, if we are taking positional trades, then daily chart is very important. But if we are taking intraday trades, then for indices, 15-minute charts are very important. 15-minute trend is most important. And we can look to take trades in direction of 15-minute chart based on 5 and 3-minute time frames. So those who are very interested in intraday trading, they can look for 15-minute trend and they can take trades based on 5-minute and 3-minute charts. 1-minute chart as far as avoided is best because there are a lot of fluctuations on 1-minute chart, but 3 and 5-minute charts give very good trades on intraday basis. But for weekly, for positional trades, it's always better to look at weekly and daily time frames and take trades based on either daily time frame or 75-minute time frame.
So, sir, if it is uptrend on if we are taking weekly trades, a weekly expiry trade on FNO, and it is uptrend on one day, daily and 75-minute time frame, then only we have to look for 15-minute time frame for weekly expiry. If
Yes.
it is down on 75-minute time frame, then there is no meaning of looking at 15-minute time frame. It is
So
downtrend.
if it is down on 75-minute time frame and daily time frame, then what is best? Look for 15-minute time frame to give entry at selling levels and look for down moves. Don't look
Okay.
for buying opportunities.
Okay, sir.
It's better to short.
Okay, sir. So, if you are trading on daily basis, then look for a 15-minute time frame. And if it is up, then look for buying opportunity on 5-minute and 3-minute time frame.
Yes. So look for force, look for trend. We are going to discuss about the force. But when both are in sync, then they give very good trades. At least one of them should be in sync with our trade. If we are trading against momentum, we are trading against the trend, then we have higher chances of failure.
Sir, is there any new indicator or any new sign for force in your tape
So
reading
we
tool?
are going to discuss about force. I'm going to show it.
Okay, sir.
Sir,
Yes, ma'am.
good morning. Sir,
Good.
in tape reading tool, when it is green, it is a uptrend. When it is red, it is a downtrend, red or black. That much we don't have to worry our heads over it, right?
Yes.
Okay. So once we know, supposedly there is a, we are investors and there is a monthly time frame is green, weekly is red, and again 75 minutes is means green or red, means there is alternate colors. So
Uh-huh.
in these cases, which one to rely on most? 75 minutes and day chart I have seen, sir. There's a lot of difference. In 75 it is green, then it is on day it is black or red. So why is there so much difference?
It's going to happen because all the directions will change. Price never moves in this direction. It goes up, it comes down, goes up, comes down, and this happens on all time frames. So when prices are going up, then on this is if suppose price is going up on daily time frame, on 15 minutes, what will happen? It will be like this.
Okay. Mm.
And sometimes it can come down, again it can go up. On 75 minutes, it will be slightly different. So
Morning, sir.
I will
Okay, sir.
yeah, good morning.
Thank
Just
you,
a minute,
sir.
I'm explaining something.
Mm, mm.
So when prices are going up, this is up one way up on larger time frame, suppose daily time frame. On 75-minute time frame, what will happen? It is going up, it is coming down, it is going up, it is coming down, it is going up, it is coming down. On 15-minute time frame, this will show uptrend, then here it will show downtrend, again it will show uptrend, again it will show downtrend, again it will show uptrend, again it will show downtrend. So depending on the variation in time frame, trends will change. But what we can do, if this is retracement or pullback on lower time on higher time frame, this is a daily chart or 75-minute chart, there is a retracement and 15-minute is down, don't take a shorting trade. Instead, when the trend changes on 15-minute also towards upward uptrend, 75 is uptrend and daily is in uptrend, 15 has turned to up here, take a trade for up move. That
Oh,
is the trading in direction of trend and trading in direction of higher uptrend also.
yes, sir. And sir,
Sometimes it will show different trend on lower time frame, therefore we have to see what is the trend on higher time frame.
oh, sir, another question, short one. So 75 minutes and daily, which is more important to look for, because they are
Higher
very
time frame
close.
always gets more importance.
Okay, sir. Despite the fact that the candle is not even on day time frame.
Doesn't matter. Higher time frame always gets but more importance.
Okay, sir. Thank you, sir.
Sir, just a question.
Yes.
Sometimes we get red candle, but there is a buying area, and sometimes we see
Yes.
green candle that is in selling area. What should dominate, the candle color or the area?
Yeah. So if the trend is up, suppose there is some selling area from past and the trend is up. In my analysis, what I have seen is most of the times this area is broken. Selling area is broken. So don't try to sell here. for taking shorting opportunities. If you want to do anything, if you have bought here somewhere, you can look to book profit in selling area, but don't go short when the trend is up. So when price is reaching a selling area and color of candles is green, at the most you can look to book profits, exit your current long position. Don't go short. When prices are falling, color is red and there is a buying area. If it comes down here, don't buy. Don't buy to go long. But if you are shorted somewhere here, you can look to exit your position.
Okay, thank you, sir.
Yes. Any other questions?
Well, sometimes it happens that in a shorter time frame, we are not in a buying area, and the higher time frame gives a buying area at that level. And how do you behave? Say in gold, it is happening nowadays like that. In 15 minutes time frame, there is no buying area, but there is a buying area in 75 minutes time frame. Currently, at current price.
So suppose prices are in uptrend on 75-minute time frame and it is in buying area.
So it is in
Price has come
sideways,
down in
sideways
buying
and
area.
buying area. Sideways and buying area.
What?
Sideways. Trend is sideways.
Trend is sideways and
Yes.
price is in buying area. So if the trend is sideways, don't trade it. Let it go.
In 75 minutes. But in 15 minutes, it is green.
See, if the price on 75-minute it is sideways,
Okay.
then it can give very small trades. Maybe on 15-minute we can look for 1:1 opportunity, 1:1 two opportunities. That's it. Because trend is sideways, it can go up, it can come down. There will
Okay.
not be any force, and there will not be very good trades. When prices are trending, or if there is a force, only then it can go in one-way direction and it can give us good big risk reward trades.
Okay.
But if they are non-trending, then what can happen? Prices are sideways on 75-minute, then wait for 15-minute to create a buying area. If it gives entry in that buying area, take opportunity. We may get 1:1, 1:2, sometimes 1:4, 5 also. But I would like to avoid that kind of trading.
So TRT, the color changes only when in that time frame the selling or buying area is broken.
Yes.
In between, it is only the reversals that will happen.
So suppose on
Between-
TRT, if the color is green and
Yes.
there is a buying area, there is a buying area. This buying area when broken, only then candle color will become red.
Yeah.
Otherwise, it will stay green.
And it will, once it reaches the selling area, then also, yes, if it breaks, it remains green. But if it comes back, then it changes the color. If it is
No, it will not change the color.
reverting,
Suppose this is a
back
selling
from-
area,
Yes.
price touches this and it comes down. It will
Yes.
not change the color unless buying area is broken.
Okay. So in between, whenever there is some reversal, the reversal areas will be printed, but the color of the candle will not change.
Yes. It will become yellow at the most. If there is some selling area, new selling area printed without break of buying area,
Okay.
it will change to yellow color.
Okay.
So it may show bullish sideway or bearish sideway.
Yeah. So if selling area is not, buying area is not broken and selling area has been formed, so it will show bullish sideways color.
Okay. And similarly for the opposite way. Okay.
Yes. Yes.
Sir, can I ask something?
Yeah, please.
Yeah, good morning. So, suppose there are two buying areas overlapping each other. Suppose on 15 minutes and on 75 minutes, there are buying areas which are overlapping each other. Then is that buying area considered as a stronger buying area and more likely to be respected? Or yeah, can you explain this?
So suppose this is yellow, which is a 75-minute buying area,
Yes,
and
sir.
red is a 15-minute buying area.
Yes, sir.
Okay. Yeah, so it can be a strong buying area, and we can look to take trade, because if 75-minute trend is up and
Yeah.
price has come down in pullback in
Yes,
this
sir.
buying area. So
Yes, sir.
either in 75 or 15-minute, in any
Yes.
buying area it may come.
Yes,
If
sir.
we take trade based on 75-minute
Hmm.
area and keep stop loss below 75-minute area, it will give us higher probability of success, because entry will be more likely here at higher level. It may or may not come to this 15-minute buying
15
area.
minutes. Yeah, yeah.
And if we keep stop loss below this 75-minute zone on candle closing basis of 75 minutes, then it will give us better chances that our trade will be successful without hitting the stop loss. But if you want to increase the risk reward, at that time what you can do, you can look for entry at 15-minute chart
Hmm.
and
Hmm.
stop loss below 15-minute level. So that will reduce your stop loss. Suppose
Yeah.
this is a stop loss of 100 points,
Yeah.
and on 15 minutes you are getting stop loss of 30 points.
Yes,
So
sir.
this 30-point stop loss will increase your reward by
Yes, sir.
at least 3 times. Position
Yes, sir.
size can be increased by 3 times. So it can increase your reward by 3 times.
Yes, sir.
But there will be more chances of hitting the stop loss. If you keep stop
Okay.
loss below 75-minute zone, then there will
Hmm.
be more chances of maintaining your trade without hitting the stop loss, and you can make a better success rate in that case.
Yes, sir. Yes, sir. Okay. Okay.
Correct.
Another question, sir. So
Yes.
if you are trading intraday, then where to look at 3 minutes, 5 minutes, and 15 minutes. So do we have to
Yes.
take trade on 15 minutes or where to take trade on 3 minutes? Lowermost one.
So if you take trade based on 15-minute, what will happen? 15-minute chart may not give you rapid up move on same day.
Yes, sir.
15-minute chart usually keeps on trending for
Hmm.
2 to 3 days.
Okay.
So for this, you may not get target today, you may get target next day or day after tomorrow.
Okay.
But if you take trade based on 3-minute or 5-minute, what happens? 3 and 5-minute trends usually end on same day.
So 15
And
minutes is for
stop loss
buyers.
will be much smaller here. In 3-minute and 5-minute, stop loss will be much smaller. It will be easier to get that much of risk reward. Suppose you are taking trade on based on Bank Nifty, and
sir.
stop loss is 300 points
Hmm.
based on 15-minute chart.
Hmm.
Whereas on 3-minute chart, it is 100 points.
Hmm.
And Bank Nifty moves further 300 points.
Yes, sir.
So here you are making just 1:1, but here you are making 1:3.
Yes, sir.
So it is better to take trade based on 3 or 5-minute charts. And
Okay.
if it is near 15-minute zone, it is well and good. If it is not, even then 3 and 5-minute charts can give us better risk reward trades.
Yes, sir. So 15 minutes is basically for buyers.
Yes, 15-minute is for buyers, and
Yeah.
3-minute and 5-minute are for entry.
Okay. Thanks a lot.
Sir, sir, hello.
Yes.
Sir, for future trades, if we are buying next month futures, means we have minimum 60 days. What time
Mhm.
frame we have to look for putting stop loss?
So what you should do is multiply your time frame by 60.
Okay,
If you are taking a trade based on trend,
okay,
okay, what does this mean? I will tell you. A trend is like this. It goes up, comes down, goes up, comes down. And what I have seen is normally the trend has given profit, or it when the profitable trade is taken, when the trend moves in our favor, the profitable trade goes on for approximately 75 to 80 candles. Okay.
okay.
And loss making trade,
Which time frame?
usually I'm telling you about candle number, not time frame.
Okay,
Okay, for 75 to 80 candles. And if the trade goes into losses, usually it exits the trade in less than 20 candles.
okay,
Okay, so this is
okay,
number of candles, and this is based on color changing to green and color changing to red. So if
okay,
color changes to green and if we buy here, then either within next 20 candles it may hit our stop loss and make us exit, or it can go up and then change the color after 75 to 80 candles and make us exit from profitable trade. Okay,
okay.
have you understood this part?
Yes, sir.
Okay, so if the profit will be within 75 to 80 candles and loss will be within 20 candles, then we have to calculate number of days required. If you look at daily chart, right? If you take a trade based on daily chart, what will happen? 60 candle means approximately 90 days or 3 months, right?
Hmm. Hmm. Yes, sir.
If we take 20 days per week, per month as a trading,
Okay.
so approximately 3 month time, 2.5 month to 3 month time. So within a month, either it will hit the stop loss or in 3 months it will give profit. If we take
Okay.
75-minute candle, then what will happen? This will be reduced by 1/5. In one day, there
Yes.
are 5 candles.
Hmm.
So instead of 90 days, or how much time it will take? It will be around 18 to 20 days,
Okay.
right?
Okay.
75-minute candle, 5 candles per day. So if there are 60 candles, it will go to 12 trading days.
Okay.
12 trading days means 2 weeks and 2 days. So 2.5 week.
Okay.
And if it goes to losses, either it will hit stop loss within 2 or 3 days or within 1 week at the most.
Okay.
Now, if you are taking trade in buying area, then this time will get reduced. If it goes into losses, it may go into loss within 5 to 6 candles. Okay?
Okay. Okay.
Because the color has changed green. Here you are buying, or if price comes down in retracement. So
Yeah.
this time is already reduced. Therefore,
Okay.
if it comes in buying area, it can hit your stop loss within 5 to 6 candles or make you exit in winning trade. It can go on and it may end up to 50 candles.
Okay.
Okay, so this way you can calculate your time, multiply everything by 60, your time frame multiplied by 60 if you are taking a trend following trade for
Okay.
profit. So within 60 candles, you can look for booking profits.
Okay. Okay. Sir.
Okay.
Okay,
Just
sir.
a minute. Let me mute other people.
Sir, one question.
Just a minute. Yeah, somebody was asking a question.
Sir, I
Yes.
want to suggest one thing.
Yes.
Suggestion for all, just look for 15 minutes candle and then look for 3 minutes candle and then think how does this last 5 candles of 3 minutes are forming the 15 minutes candle. This is a good mental exercise.
Yes. So we can uh, look at the chart of 15 minutes and understand how this 15-minute candle is formed on 3-minute chart, right?
Yes, sir.
Yeah. And you can, on multi-time frame, I will discuss further more things about this. We are going to discuss that.
So what information we'll get by analyzing this, looking at 15 minute candle and then 3 minute candle?
We'll discuss this
Can
in
you explain?
multi-time frame analysis.
Okay, sir.
Excuse me.
Yes, Akshay.
Yeah. On a higher time frame, if the trend is upwards, that's the green
So we'll
candle.
discuss this in multi-time frame analysis.
No. So in the lower time frame, means the
Yes,
low.
so you are asking about higher time frame and lower time frame. What I'm saying is, I will explain few
Okay.
things on multi-time frame and then we'll discuss this.
Okay.
So sorry. So that's you told something about 60 and then 60 days and then there is a fall in the next 15 days. There was a initial part, sir, when you asked there is a 60 and 75.
I
60
said
days
that
you must
if
say.
you have taken a trade, the stop loss can get hit in 20 days or 20 candles and profit can be booked in 60 to 80 candles. So if you are looking at daily chart, then it will be 80 daily candles. If you are looking at 75-minute chart, it will be 60 to 80 75-minute candles.
Okay. Thank you, sir.
How does this information help? Suppose you have bought somewhere in the buying area, from there prices have gone up and there are more than 40 candles and there is a rapid up move. Then you can look to book profits in this rapid up move, looking at this as a end of trend with a climatic move. You
Okay.
can look to book profits. Partial profit booking can be done, or you may exit your full position based on your mindset. And if you book partial profits, you can look to keep stop loss, trailing stop loss at this level. So this will ensure that you have booked some profits. If move continues on upward side, you will still hold some position. Uh, if you are booking full position, then you will not be able to hold on. But if you book some profits and price comes down, then some profit will be booked at higher level and remaining position will be exited at lower level.
Okay, sir. Thank you.
Yes. Okay. Any other questions? Joint, let if possible explain that chart analysis based on new indicator. So we have not yet gone to that indicator. We are going to do that. Don't worry about it. Okay, so this is about trend. Please go through the video of trend. I will share the link in group again. Then understanding the force. This is very important. So what I will do is I will first mute everyone and I will allow participants only when they raise the hand. Otherwise, sometimes 2 or 3 people are asking question at a time. I will also share the link in this chat box at end of the session, and I'll send the link for joining my group, Telegram group. Okay. So understanding the force. Can anyone tell me what is force and how we can identify the force? Anyone would like to explain? Please raise the hand. I will unmute you. Yes, Hetal sir.
Force is a strength and it will be decided by candle size and volume.
Okay.
With,
Candle size, volume.
is there any visible or invisible gaps are seen?
Gaps. Okay.
And
So how will you see the bullish force?
so candles are larger than previous average size. There are
Previous average size means what?
last 10 to 20 candles.
Last 10 to 20 candles. So last 10 to 20 candle average size. Okay. Is this same as moving average?
No.
No. Okay. So how will you decide average size of last 10 to 20 candles?
Now we are used to use
What is candle size? What is candle size? ATR can decide average size. Okay. Average true range that can decide average size. So Hetal sir, what is a candle size?
we consider the body of candle.
This is a candle. Top wick, high, low, and suppose this is open, this is close, this is low, this is high. What is this? What is the candle size here?
This is green candle.
Yeah, this is green candle, yes, because open is here. So this is a green candle.
Which almost 80% is body.
Okay, body is large. So maybe if suppose this is 10%, this is 10%, this is 80%. So body is 80%. And candle size?
If it is larger than previous average, then it is strong bullish candle.
So how do we know that candle size is this much? Suppose this is 100, this is 101, this is 109, and this 110. High is 110. Okay, 100 to 110. It has moved from 100 to 110, and 101 is open, 109 is close.
Okay.
How much is the candle size here? So candle size will be high minus low. This is candle range, right? High minus low is 10 points here. So this is candle range, and open minus close or close minus open, that will be body size. So here body is 8 points. 109 minus 101. Okay, has everyone understood this? This is a candle. Top wick is 1 point, bottom is 1 point. This is 8 points. Total high minus low is 10 points. That is candle size. And bodies is open minus close or close minus open. That is 8 points. So here body is 8 points. Body is 80% of total candle range. This is size of current candle. 10 points is size of current candle. Now suppose there is this kind of move and there is this kind of move. So is this candle larger than average of last 10 candles?
Yes.
Yes, we can very easily see that. Now suppose there are this type of candles and there is this candle. Then will it be possible for us to understand whether this candle is large candle or small candle or average candle?
No.
It will be difficult to understand, but if we take average of this, then we will be able to understand whether this is larger candle or average candle as compared to average of last few candles. So last 10 candles is usually what I take. You can decide your average. But here, if we want to see what is the average size of last 10, high minus low and add all and divide by number of candles. So suppose we are taking 10 candles, then add high minus low or range of last 10 candles and then divide by number of candles. That will give us average range of these candles. Okay.
Okay.
And as compared to that average range, we will check the current candle size. If the current candle size is big, how will we decide this is big candle as compared to previous 10 candles? We can keep a multiplying factor. So suppose we feel that 1.2 or 1.25 is the multiplier which we can rely on, that if the current candle size is more than 1.25 times of last 10 candles, then we can take that. If we feel that it should be 1.5, it should be 2 times, you can decide your parameters, but I have seen that we can rely on 1.25. So this is a widespread candle. This is called as a widespread candle or a larger spread candle. This is candle spread. Along with this, what is another thing which is important?
Volume.
Candle close. So this is very important. Suppose candle size is and body is like this. Is this a strong bullish candle?
No.
No, because there is a lot of buying and selling at top and bottom, and there is a big wick at top and bottom. So this is indecision candle. Whereas if the candle forms like this, there is a small wick at bottom, small wick at top. What does this indicate? That opened here, it went down slightly, and then prices went up significantly and closed slightly below this. So there is presence of strong bulls. So there is a strong close. That means this is strongly bullish candle. Now, how can we identify a strongly bullish candle? I have seen that if it closes in higher 70% of candle range, then it is strongly bullish candle.
Okay.
Okay.
Yes.
So one is candle spread, average candle spread more than average of, we'll write more than ATR. Then body is strong. So if the body is strong, then it is a strongly bullish candle. So bullish force is visible. Apart from this, what do we see? You said volume and gaps.
Yes.
Yeah. So if the volume is increasing, there was a fall with this kind of volume, and there is strong up move with increase in volume. So volume has increased. Is it bullish or bearish?
Bullish.
Bullish. Now, if prices have come down like this and there is a gap up open and prices went up, so there is a gap here. This is bullish or bearish?
Bullish.
Bullish. Suppose it created a candle here, so there is invisible gap here. Prices kept on moving with a follow through. So is this bullish or bearish?
Bullish.
Yes. So either visible gap or invisible gap or hidden gap. So if these are present, volume has increased. Volume is still slightly less important, but candle size should be strongly bullish, body should be strongly bullish, and there should be visible gaps. These are the parameters which I have seen or I have added in the indicator to see the strong bullish candle. Now, someone else can explain how will be a strongly bearish candle. Yes, Akshay sir, I have
Yeah,
allowed you to unmute. Yes.
yeah. A strong bearish force means there will be a widespread red candle with the body closing at the lower end.
Yes.
Then there will be a downtrend. It will
Downtrend is not necessary to see the force.
I mean okay, a force, only the force, and it will break the previous swing low.
So that will be impulse. If it breaks previous swing low, it will be impulse.
Okay. And
What we have discussed right now is body size, candle size,
Yeah.
and volume and gaps.
and gaps.
Yes.
There's a visible gap or a hidden gap.
Visible or invisible gap or hidden gap.
Yeah, yeah.
And volume may see increase
Increase.
on downside. So body should be large enough. Large means at least 50% of total range. So if it is body is more than 50% of total range, then this is a good body. And candle size should be more than average of last 10 candles. So opposite rules for here to understand the selling force. So this is how we can understand whether it is a buying force candle or selling force candle. And this force validates the sustainability of trends. And key indicators we discussed, candlestick analysis is more important and volume also may be important. So this is how we can understand the force. Now suppose price is in uptrend and this is a buying area, and here price comes down with strong selling force. What happens? Should we buy immediately in the buying area?
No, no.
So if we are taking trades based on rules, we can directly buy at this area. But if we go and add our discretion, then what can be done? If this is a buying area and price falls down very aggressively, then we can just wait for further price action to develop, because I have seen when the price comes in buying area with very strong force, then this buying area gets broken. And again afterwards it will provide another opportunity. Or sometimes what happens, prices go up here and then again it comes down below this buying area, below this candle's low. Why does this happen? Because they want to hunt the stop losses.
And the stop
So
loss.
this is a price action, and suppose this is a buying area. Okay, and here price comes down very rapidly, comes in buying area, goes up like this, goes up very slowly. Next time again price comes down comes down slowly, comes below this candle. So this is the entry candle, which is first entry. This time buying force was selling force was very aggressive, and next time price came, selling force is weak. Most of the time I have seen that price goes below this area, and some people have kept stop loss below this, so that stop is hit and then it reverses. So when the selling force is very aggressive, this may happen, either price will come below this area or it may come down below low of the buying area. This is very important point to note. You can check on your charts from now on how is the force and what is the reason when buying area has not worked. So this can be the reason when selling force was aggressive at that time. Buyers did not buy immediately in this buying area. They waited for prices to see what is the price action, and but let the area of least resistance develop. Let the line of least resistance develop. Line of least resistance will be seen when there is a lack of force on one side. So if prices are falling without any force, then area of least resistance will be on upside. We can buy in buying area. Okay. So this is the force, and we have discussed how to measure the force with rising volume in up moves, or in direction of the momentum. Volume should increase and volume should be declining in opposite direction. So if the trend is up, then up move should have more volume, down move should have less volume. That will be appropriate price action for that. Large body candles should appear in the direction of trend. If the trend is up, big size candles should appear in upward moves, and small candles should appear on down moves. Long wicks indicate indecision, and even if the candle size is large but there are wicks and body size is small, it does not indicate that there is a strong presence of one side. It's indecision. Okay. Are there any questions here about force? I will show the charts also in some time. First, we'll go through this discussion. If anyone has any question, please raise your hand. If anyone wants to repeat any part, let me know. Yes, Prashant sir.
Yes, sir. Sir, importance of long upper week or long lower week.
So if there is a big upper wick,
Very small
or
body size. 80% weak and only 20% body size. Only in one
so if
direction.
there is a very strong up wick or down wick,
Yes, sir.
at the bottom or top, if there is very strong wick, then
Yes,
what is the importance of this? That is your question.
yes, sir.
Basically, this depends on where we are. Suppose there is a selling area, and in selling area there is a candle like this. It indicates prices went in selling area and there is a strong selling. If this low is broken, it is likely to continue on downside. Okay. But sometimes what happens? Prices are moving like this. There is a sudden gap up and candle shows weak like this. There is a gap here. Is this week important in this case? Yes.
No, sir, not important.
Not important.
Because
Similarly, if we go in buying area and this candle forms, suppose we are here in buying area and prices are falling like this, and then there is a candle like this. There is up move and then small body candle. Then will you go short here?
no, sir.
No. So only wick does not indicate anything. Where we are and what is the background condition, that is more important. Just one candle is not important. What happens, what has happened before that and what happens after that is important. So if there is a gap up open and there is this candle, then even after this, it is likely that prices may come down slowly and later on it may break out. So this week is actually indicating that bulls were trying to go and close the candle up, but there is selling here, and from that selling, prices have come down and closed at this level in the bottom area of this candle. But if there is gap up, then actually there is a big candle here, and this can be a close in upper 70%. There is a hidden candle there. So this wick indicates that there is a selling, but whether this selling is significant or not depends on background condition. Similarly, for bottom wick, it may happen that prices may be in selling area and bears tried to sell, but recovery happened again. If this low is broken, next time bears will sell aggressively. But if this happens at the bottom, prices were coming down, it went below some support area, and after that it reversed and closed stronger. Then it can indicate a spring and prices may not come down again below this level. So we have to understand that this single candle does not provide any setup. What is the background condition? What is the market condition? That gives us more confirmation. If the markets are strongly bearish and this candle appears, it looks like bullish reversal, but it may fail and continue to fall down. So it can be a trap.
Sir, one more question.
Yes.
It is not relevant right now, but as you discussed force, sir, many a times I have seen that the last 30 minutes, like 3 hours to 3:30, is the most crucial time, because whenever you see there is a downtrend is going on, and suddenly in last 30 minutes there is a reversal, and it is with good force, like you have said, with volume and with large body candles. Is there any importance of last 30 minutes trading?
Yeah, it can be
Particularly,
covering of the position taken intraday positions. Suppose the day was nicely strong, prices were moving up, and there was strong uptrend. So at end of the day, those people who have taken trades for intraday, they will not be comfortable holding this. They will book profits at market and there will be some fall. Similarly, if there is a downtrending market, at end of the day, these people will book profit in last 30 minutes and there will be some rise.
so that will not decide the next day's movement.
So it sometimes can decide, it may not decide. It's difficult to take trade just based on that information,
Okay.
because it can hit your stop loss in a big way. Suppose it is downtrend and last 30 minutes shows some recovery. This recovery will be on 3 minute or 5 minutes. It will not be recovery on 15 minutes or daily
Yes,
chart.
sir. Yes, sir.
So this is a recovery on 3 minute and 5 minutes, and this ends on same day. Next day it can happen that there is a big gap down because main trend is down. So if you buy here with stop loss below this, and this recovery suppose is 100 points, and you have bought with a stop loss of 100 points. Next day if there is gap down of 300 points, what will you do?
So then what I want to ask is, if this kind of movement is seen, that trend is strongly bullish, and we see some recovery, like you have said, short covering, at that point, can we go long? Is trend is bullish,
Suppose this is strongly bullish and there is profit booking at end of the day.
at that time at 325 you can go long for next day?
If you go long for next day, your stop loss should be based on either 15 minutes or 75 minutes or
Okay.
daily chart, and
Okay.
the trend should be up on those time frames.
Okay. That's the most important part. Thank you, sir.
Yes, yes. Calculation of average of last 10 candles on chart. Yes, I will show it. Okay. So this was about force. Then we'll go and discuss about determining higher time frame bias. And after this, we'll go to charts. Okay. So important, the higher time frame bias is very important. We must identify the trend, observe the market movement on larger time frames. Daily time frame is important for everyone, whether you take intraday trades or if you take swing trades or positional trades, whatever kind of trades you take, daily time frame chart is most important and everyone must check daily chart. So daily chart is very important. Identify the trend on daily chart and understand what is happening on lower time frames. Understand the context of daily chart. Suppose price has created uh, a trend. There is this move and buying area is printed here. Okay, this is daily chart. From here price can come down to buying area. Nifty's and bank nifty, they are touching buying areas now. So if on daily time frame this has created bullish change and coming down to this buying area, what is likely to happen on 3-minute, 5-minute, 15-minute charts from here? What is likely to happen? Anyone would like to answer this? Please raise your hand.
Sir, 3-minute, 5-minute, and 15-minute candles show down move. So
Yeah, so they are likely to show downtrend, right? Daily trend is up. Daily trend is up, and here also there is likely to be a pullback. But on 3-minute, 5-minute, definitely there will be some time when trend will be down, and 15-minute may also show downtrend. But 3 and 5-minute will definitely show downtrend on this time frame, on that time frame
15
during
minute
this
maybe yellow
downtrend.
candle.
Yeah, 15-minute can be yellow candle or it can be a red candle also.
Okay.
But 3-minute and 5-minute will definitely show
Red
downtrend.
candle.
Yeah. So if the force shows down, even though trend is sideways, okay, 15-minute sideways, but
Okay.
the force on downside appears, then what we can do, we can look for 3 and 5-minute charts to take shorting opportunities till the time prices come to buying areas. Okay.
Okay, sir.
So how can we trade this? Look for 15-minute. It should either be sideways or there should be strong down force on 15-minute. Prices are likely to come back to buying area. Then trend on 3-minute and force on 5-minute. 3 and 5-minute trend and force both should be down. Then look for shorting opportunities and take trades. So
And
that is possible with
target should
multi-time
be
frame
upper.
analysis.
Target should be upper boundary of the buying area or lower boundary.
It will be intraday trade. Just close the trade at end of the day.
No, but if it touches the buying area, then exit immediately or wait or trail stop loss.
Your trailing stop loss works well.
Okay.
You can keep target also, but trailing stop loss will also be fine.
Sir, if the trend is bullish on 75-minute and
Yes.
30-minute maybe, and only 15-minute is sideways, and
So I don't check 30 minutes. See, 15
okay,
minutes, then
5,
75
15 and
minutes.
75. And 75-minute is bullish, 15
Yes.
minute is sideways, only 3 and 5-minute is red.
Yes.
Then which buying area we should see? 75-minute, 15-minute, or 3-5-minute?
3-5 minute buying area will not work because the force is down, the trend is down.
So
3 and
15-minute
5-minute buying area will not
then-
have any importance.
Then which buying area you have suggested here? 75-minute.
Either 15-minute or 75-minute, because 15-minute you said is sideways, so it can be bullish sideways, and if it is
Okay.
bullish sideways, it can react from that area.
So
Or
75-minute
75-minute.
75-minute buying area could be the first target.
That can be last target also.
Okay, first or last, whatever.
Yes.
Okay.
Because from there we expect the prices to reverse.
Okay, sir. Understood, sir.
Okay.
Okay, sir.
So this is how we can identify the trend on higher time frame, understand the context, and then align our trades in that direction. As I mentioned, prices will never go up in one way direction. It will go up, come down, go up, come down. So take this trade only if there is a force and trend on lower time frame. If there is no force on lower time frame or trend is not supporting on lower time frame, don't take that trade. It's better to let it retrace up to this, and when it starts moving higher again, at that time take a trade in direction of higher time frame. It's not necessary to take trades every day. It's better to wait and watch and take only high quality trades, high quality setups which align with higher time frames. So we can understand that daily chart is moving up and there is likely to be a retracement. If you want retracement, trade with lower time frame analysis. If you don't want to trade this retracement, just let it go. Look at some other chart which is in direction of the trend. Okay. So higher time frame bias is very important, and the common mistake is ignoring higher time frame trends and over trading against the bias. So higher time frame trend is up and we are looking at lower time frames 3 minute, 5 minute and taking trades only on those charts against the main time frame. That can be a costly mistake. It is very common mistake. So if you take trade in direction of 15-minute chart and 3 and 5 minute are also in same direction, that will give you a better success rate. But if 15 minute is against you and you are taking trades based on 3 and 5 minutes, it is likely to hit many stop losses because the price action will be sideways on 3 and 5 minutes. It is less likely to be a trending move. So higher time frame will provide us context for smaller time frame trends, and we should avoid common mistakes. Higher time frame bias can be identified using support and resistance method. Some people use price action method, but my method is price action. I don't use moving average method or support resistance method. You can use whatever you want, but take trades only in direction of higher time frame bias. That is the best solution. So how can we integrate these concepts? Identify high time frame bias, trend identification on all time frames, and wait for setup. Confirm the trade setup with force and only then take trades. Unless there is a good setup, don't take trade. Okay. So this way, as I mentioned, prices are moving higher and then go sideways and then downward force appears. Now from here we expect price will come in the buying area. Only then look for opportunity to short. If the trend is up and downward force has not appeared, then it's very risky to take short trades thinking that prices will come down in this buying area. At least one thing should be in your favor, either the trend or the force. If both things are not in your favor, don't take a trade. If at least one thing is in your favor, you can take the trade. Either you should take trade in direction of the trend or in direction of the force. One of those things must be present before you take the trade. Okay. Vikram sir, what do you want me to repeat? Yeah, Ketan sir, you have a question?
Yes, sir. Many a times it happens, as I have seen in indices, that the distance between the selling and buying area is very less. And
Okay.
how to interpret that thing, anything, either entry, exit, or keeping stop losses, trailing. Many a
So
times
on which time frame?
on almost all 75 also they give like this. Even 3-5 minutes also they give places where the distance between the buying selling area is very less.
So suppose this is buying area, this is selling area.
Hmm.
Now it will depend on what is the current trend. Okay.
Mhm.
Suppose previous trend was down. There is a selling area here, selling area here, selling area here, selling area here.
Yes. Now, if any new buying areas are printed, then
Now when prices move like this and come down,
yes.
at this time this selling area will disappear
Hmm.
and
New buying area will be formed.
just a minute. Just a minute, I have a call for emergency. Wait a minute. Yeah, sorry. So we have this. I don't know why the color is not coming. I think, yeah, here, draw. Okay. So new buying area is printed here, right? Now you are saying that this is buying area and this is selling area, which is very close to each other. Yes, Ketan sir, is that your question? Hello. Okay. So this is a buying area and this is a selling area. Now candle color has changed to green. What does this indicate? That trend is up. Now as the trend has changed and uptrend has started and previous selling area has been broken, what is likely to happen from here on? All the selling areas are likely to disappear and new buying areas are likely to form. Okay. From here, what is likely? Prices in downtrend. There were selling areas and up move started. Price came down in buying area. Next time this will get broken, new buying area will appear, but price will not come to this buying area. It will continue moving higher. So this is trend following. We don't look at selling areas once a selling area nearest selling area is broken. Because this is a selling area which is broken, next selling areas are less likely to get respect and they are also likely to get broken. Only those selling areas where a strong force was present, they may provide some resistance, but ultimately, as long as the trend is up, all the selling areas will disappear unless a buying area disappears. And this happens, suppose this is a 5-minute time frame. So if 75-minute trend is down, then we are likely to face resistance on 75-minute selling area. There can be some another selling area of this time frame also at same level. So that time we may face resistance and we may see some fall. Till that time, it is likely that all the selling areas of same time frame will get broken. Okay. Yes, Ketan sir.
Yes, yes, very much clear. This is what is exactly has been happening. I had been trying to respect the selling areas, the older selling area after the reversal of the trend. That used to cause me a lot of confusion. Yes.
Okay.
And now, once say suppose in 5 minutes, the trend is up and there may be some reversals within the 5 minutes also.
Uh-huh.
We take it for granted that the 5 minute trend will ultimately respect the 75-minute selling area. Until then, we can confidently go on keeping the trade with trailing stop losses or without trailing
Yeah, so
stop
if you
loss.
keep the trailing stop loss and 5-minute chart turns red, then you will have to exit the trade.
Yeah, but then over a longer period of time, say suppose if we take it for 2 days, then there are all the chances that it will go till the selling area of the 75 minutes.
But the issue here is you have taken trade based on 5-minute chart. And if you have taken trade based on 5-minute chart, your position size is likely to be large because the stop loss on
That is a
smaller time
secondary
frame will be
issue.
small.
So that is a secondary issue. My first primary issue is whether we will be right that this 5 minutes price will go till 75-minute selling area someday, not on the same day or the second day. And then
Yes,
only
it will go to that area, but this is not secondary issue. This is primary issue. Position size is very important. Suppose you have taken trade based on 5-minute chart, considering the stop loss is just 20 points, and it goes in your favor. It goes up by suppose 200 points. You are already 10 times in profit as compared to risk taken. But if you want to stick to 75-minute target, then you will have to look at the stop loss of 75-minute time frame.
Got
It can be maybe 200 to 50 points stop loss on 75-minute time frame, and maybe your target is 700, 750 points. So that can be a good target based on that stop loss. But if you are looking for that opportunity to capture 700 points based on 20 point stop loss, then sometimes there can be a big drawdown and your 20-point loss stop loss will be gone.
Got it.
Otherwise, there can be a big profit erosion from your trade. So it is possible that it can go up, create a downtrend again on 5-minute chart. Again, it will create 5-minute uptrend. It will provide you opportunity to buy again. So what I would suggest is it's better to exit on 5-minute chart, and if next opportunity appears, then buy again.
Okay, with
Or otherwise exit at least half position so that you are safe, and then when if next opportunity appears, you can add on.
and we can bet upon we can reasonably bet upon the bias that it will reach up to 75 minutes selling area.
Yes, yes, that can be done. This is because the higher time frame is in upward direction, but the position size should be as per higher time
Okay,
frame.
got it. Thank you.
Okay.
That is always
Yes.
confusing. Yes, now fine.
Yes, Prashant sir.
Sir, my question is,
Yes.
does the price respects a selling zone in the lower time frame or in the higher time frame? Means I'm reframing the question which Dr. Ketan sir just asked. So the price, if we take trade on a lower time frame, it's on the long trade, and the selling zone is respected generally in the which is seen in the lower time frame or at the higher time frame.
Depends on the trend. Suppose on lower time frame, the trend is up. Okay. And lower time frame selling area is here. And at the same time, there is selling area of higher time frame also, and higher time frame trend is down. Then this will get respected. But suppose lower time frame trend is up, higher time frame trend is also up, and there is no selling area of higher time frame here. What do you think? Will this selling area get respected?
No, sir.
No. prices are likely to go through this selling area and come back again. It will form something like a flip zone and again it will go up. Okay. Is that clear? I have shared link of Telegram group here. You can join the Telegram group. Okay, then we'll move to next. So how to use higher time frame bias, trend and force. We'll see some examples. So if we are taking a trade based on trend following setup, what should we look at? Daily chart should have uptrend. Then hourly pullback to support is happening. Or multi-time frame analysis is there is uptrend. Daily shows uptrend. There is a buying area here. Buying area has formed, and on hourly chart there is a pullback price action. So if hourly chart shows pullback to this buying area, what we can do, we can look to buy here, and pullback should have weak force in pullback. So there should not be very strong bearish candle. There should not be visible gaps here, or there should not be large body candles. Average spread of these candles should be lesser as compared to bullish candle spreads. So that is a good pullback price action. So we can look at daily uptrend and hourly pullback. Sometimes this happens, hourly falls like this, goes up again and then falls slowly. So this double bottom formation is seen. At least I have one or two reversal patterns. One can be a double bottom formation, another can be a trading range and spring secondary test, or there can be a bullish wedge formation. So this will be a bullish wedge, falling wedge. These are some reversal patterns which we can take. And if there is some reversal formation which is forming and prices are touching our buying area, at that time we can look to take the trade based on this stop loss. If the trade is taken when the prices are falling, once it goes up and then there is retracement again, then stop loss will become much smaller. So it's not necessary that we get best trades at this bottom. It's possible that we may get opportunity to buy here, and this may have a very small stop loss and very big risk reward. So this stop loss can be 100 points, this stop loss can be 20 times. From here it moves 200 points, from here it moves 100 points. Still, this trade has given just 1:2, and this trade has given 5 times reward. So I would consider this trade as a better trade. So that can be used. That can be your trend following setup. What will be the contrarian setup? Suppose daily trend is down and prices fall to daily support area. So this is a daily support area. Prices are falling in daily trend, downtrend. Okay. Normally what happens? Prices will break through this buying area because the trend is down. But sometimes what happens? Prices come down very slowly and there is no selling force. So how do I see selling force or buying force? At least last two swings. If these two down swings do not have any selling force and price touches in the buying area, it is likely to go up. Maybe 1:1, 1:2 risk reward is possible here. I don't expect trend reversal immediately and prices going up immediately like this. But we can see some good reversal in this buying area only when the force of selling is weak. But it is not a rule. So this will be a contrarian setup and I will not take big rewards in this. Big rewards are possible when we are taking trend following trades. There are common pitfalls here, like trading against higher time frame bias is a common pitfall, and to tackle this we should always check chart on higher time frame before executing the trade. Normally, if I'm taking intraday trade, what I do is I keep a daily chart and a 75-minute chart. So this is a chart like this. This is my one chart in one template, and then I have another template where I keep either 3 or 4 charts. So either 4 charts like this where 15, 5, 3 and 1 minute is made available, or better is like this: 15-minute chart, 5-minute chart and 3-minute chart. So this is usually what I follow daily. 75-minute on one, and another chart will have this 15, 5 and 3. This is a best possible way. We don't have to continuously monitor daily and 75. So just check once that these are daily levels, these are 75-minute levels at start of the day, and then accordingly 15-minute, 5-minute and 3-minute uh what we can do is understand or mark that probably from this level, suppose this is a 75-minute buying area and this is 15-minute bearish sideways, I feel that prices are likely to come in this buying area and I will take trade this for this down move. So plan this before taking entry, before doing anything. And as per this analysis, suppose these are your levels where prices are likely to come, these are your levels from where they are coming down. So whenever 3-minute, 5-minute or 15-minute provides any opportunity for this trade, only then take a trade. Otherwise, don't take a trade. If you have assumed something that prices are going to fall, but instead that they rise, instead of falling, they rise, then your assumption is nullified and you don't have a setup. So reanalyze and make new assumption. Only after that take a trade. Otherwise, don't take a trade. Yesterday, Prashant sir had said that prices are likely to come to 25,500 in Nifty as some buying area was broken, trends prices are falling down. So it already has come to this level. Already 25,550 is touched yesterday. So that way you can understand beforehand and plan beforehand. I don't use 45-minute chart, Hetal sir. I use 75-minute chart. So hourly, whenever I say hourly, it will be 75-minute chart for me. If it is commodity only, then hourly or 4-hourly chart is used. Link is expired and not able to join Telegram. I think some people have joined Telegram group. It's not expired. This is my number. You can message me on WhatsApp later on to share the link. I will share the link. Okay. So these are common pitfalls. Then ignoring force is another common pitfall. Many times we see that there is a buying area here, but prices are falling in strong down move. So we are excited that prices are coming to buying area and we buy it immediately, keeping stop loss below this. What happens? Price gives some reaction, but again it comes down below this. If the stop is kept on crossing basis, it hits the stop and then it reverses. So therefore we feel that why my stop is taken and I am not able to hold on still when the trade is going in my original bias. So this is the reason that force was against you when you are taking the trade. So let the force dry down. Suppose you are taking this trade based on 75-minute chart and 75-minute is strongly down. It is falling very rapidly. Then wait for either 15-minute or 5-minute to turn bullish. At least one of these should turn bullish. Only after that take a confirmation entry. So when force is not in your favor, take a confirmation entry. When the force and trend are in your favor, you can go with the setup without any confirmation. You can just go to that setup and take your trade. Then overcomplicating analysis is third pitfall. So what we do is we look at weekly chart, daily chart, 75-minute chart, and then we want to take a trade based on 1-minute chart, 3-minute chart. This will overcomplicate the things. If you want to take trade based on 3-minute or 5-minute, 15-minute is the immediate time frame. If immediate time frame gives you trend and force in same direction, then you can take the trade. Don't overcomplicate the things. And possibility of having successful trades is when you are taking trades in direction of the trend and force. So try to have some criteria that I will take trade only on this setup only when these conditions are fulfilled. Or suppose there is a buying area, I will take trade only if there is a weak fall, or if the fall is strong, then I will take reversal trade based on double bottom formation or spring formation, or maybe a wedge formation. Keep only one or two setups. Don't take too many kind of setups, different setups. There are people who want to trade based on 10 to 15 setups. It's really difficult to do that. Just identify your one or two setups which are best. You can identify your reversal pattern like a double bottom formation. If there is strong fall followed by weak fall, price in buying area, buy. This will give you good setup. Otherwise, if price is making a trading range above the buying area, what will happen? It will create a spring in this buying area. At that time, you can buy because you feel that prices will go up from here, as there is a spring and secondary test setup. So identify one or two setups to take entry, identify one or two setups to book profits. Profit booking can be done in climatic move. That is one useful setup which is important. Or you can book at some higher time frames, reversal areas. That can be a good opportunity to book profits. So these are common pitfalls. You should avoid overcomplicating the analysis and focus on alignment between higher time frame, trend, force, and bias. Okay. So these are key takeaways. Start with higher time frame bias. If you want to see anything, only one thing which is most important is higher time frame bias. After that, next is trend execution. So use the trend for your execution of your setups. If the trade is in direction of the trend of higher time frame on and on same time frame, then it has better chances of success. And finally, if it is validated with the force, then it is the best. So higher time frame bias is bullish, your trend is bullish, and force is validating that downward movement is weak and upward movement is strong. What else do you need? You can just go and take the trade. So integrate everything and you will have a better success. On closing thoughts, what I would say is the learning process is always going to continue. Trading is ongoing process. Stay curious, develop your skills further, but don't deviate too much from your plan. Whatever you want to trade, create the plan before taking the trade. Once you have a plan, just stick to that. This will give you best learning. Back testing and practice is very important. Test your strategies on historical data first. Refine your approach on historical data. Do bar replay. Test your strategy on that. Once you practice this, then go for paper trades. Take paper trades properly with rules. Then take trades on smaller account. So suppose your risk taking appetite is 10,000 rupees per trade. But initially when you are testing, go with just 1,000 rupees risk or 500 rupees risk. That will give you opportunity to learn from 10 to 20 trades. And it's very less likely that all of these trades will go to losses. If all the trades go to losses, then you can say that this setup is useless. You can avoid that. So this is the sequence. First, do backtesting on paper trading with your bar replay, then live paper trading, then small account trading, and then go to larger account. Okay. And risk management is most important. Always prioritize risk management and protect your capital. If the trades are working, you can increase position size, you can go with more number of trades. But when the trades are not working in your favor, just avoid taking too many trades. Limit the risk, limit your position size. If you are taking risk of 10,000 per trade and 4 to 5 trades have gone into losses, reduce it immediately to half. Make it 5,000 or 2,000. But don't increase the number of trades. When they start working again, then go and increase your position size to normal. So market awareness is important. Stay informed, understand the market dynamics and trends. And when your setup is working, it will not work in all conditions. But when it is working, increase your position size. When it is not working, reduce your position size, reduce number of trades. And With this, we'll go to some real world application, real trades which we have taken, and I will show you the charts. Is there any question? Yes, Ketan sir.
Yes, sir.
Yes.
Sir, the one basic question for execution. We usually go for stop loss on closing basis rather than crossing basis.
Yes.
Our GTTs, they work only on crossing basis. Is there any
Yes.
solution to it? Because at times in OPD and all, it is difficult. So
So the solution for this is you can look at higher time frame, maybe 75-minute time frame,
yes.
and 75-minute time frame will give you adequate time, and you can keep alerts based on candle close. So alert will come on your mobile. You can
Yes.
check on your mobile. During the OPD, we can keep alert or alarm for every 75 minutes that after 75 minutes I have to check this.
Okay.
But the immediately after the candle closes, just check it once. Don't take too many trades, just 1 or 2 trades at a time. That will be easier to manage. If you take 5 trades, 10 trades, then it will be really difficult to manage.
Yes. And just to add to your method, I also do similarly keep 2 time frames of daily 75 minutes on one and 5, 3, 15 on the other. And from the levels of certified daily frames, I keep trend lines, horizontal trend lines on the lower time frame to just keep the track of the
Higher time frame.
trend. That is okay.
Yes, it is good.
Thank you.
Yeah. Yes, Akshay sir.
Yeah. So my question was, in the higher time frame, if the trend is up, means there are green candles, and the immediate lower time frame, the candles are red. So we should wait for those candles to turn green in order to take a trade in that lower time frame, or see the force, if the downward force
Suppose your higher time frame is daily.
Yeah. And the immediate
This
lower
is
time
the buying area.
Yeah.
What is your lower time frame here?
75.
Okay. So 75 minute is lower and 75 minute is downtrend.
Yes.
Then what should we look for is look at the force in 75 minute.
Okay.
Okay. If there is a strong force here, but when it is touching the buying area at that time, force is weak. Then we can go long directly, buy here immediately.
Okay.
But if the force is strong here,
Yeah.
then what I would do is I will wait for some reversal pattern to appear on 75 minute. So it is likely that if it goes up, it can come down again, create a double bottom pattern, and this time the force should be weak.
Okay.
Or it should break this and create a uptrend.
Yeah.
Then I can look for buying opportunity. But if force is strong when prices are coming down, it is likely that on daily also the force will be strong.
Okay.
So this can be the discretion if it is touching higher time frame buying area, but the force is very strong when coming down. Just wait for the reversal, wait for confirmation trade. Many times it can go below this and then reverse. This is also possible.
Okay.
Yeah. Okay. Any other questions? Yes, Prashant sir.
Yes, sir. For daily trade, is there any particular time to initiate the trade? Good time that many persons say that around 11 to 12 time is the time when the market is little bit settled. At that time, you can take daily trade, or in the morning 9:30 you should take the daily trade.
It depends. Many times it depends. Now, suppose
What
the
you do,
trend is
sir?
up on daily. Okay, daily
Okay.
trend is up, and we have 15-minute buying area here, and prices are here, closed here. Okay. Next day
Okay.
there can be a gap down here. So this gap
Hmm.
down is the immediate entry.
Okay.
So this can happen immediately on first candle itself on 15-minute. So it can be 9:15 to 9:30 we can get entry, and it may not come back to that level. It can go up again.
Okay.
Sometimes
So
what happens is this is a buying area, price opens as a gap up, and then it comes down in the buying area, then it goes up. So this can come around 12, 12:30, something like that. So it depends on how the day starts. Sometimes it gives entry in first candle, sometimes it gives opportunity later on. And it's not a rule that always entry will happen at 9:30, 9:15 to 10 o'clock, or 11:30 to 12 o'clock, 12:30. If this is the rule, then everybody will wait for that time.
hmm. Sir, one more thing.
Yeah.
Yeah, I understand the principle of force you said. If you are going with the trend, if the market is higher time frame is bullish,
Uh-huh.
and same time you get force on lower time frame, then you can go with the trend with your trade and go long.
Yes.
That is the basic thing. If
Yes.
force is good, then chances of going and the higher time frame is bullish, then you can go long. And if higher time frame is bearish and the force is downwards, then you can go, then you can short
Short.
at the same time. And
Yes,
in
yes.
contrarian move, when there is support at very low level
Uh-huh.
and higher time frame is bullish,
Mm-hmm.
you say daily or 75-minute time frame is bullish,
Mm-hmm.
and daily and 75-minute support is at very low level,
Mm-hmm.
means the trend is matured enough,
Yes.
and then you see sudden force,
Mm-hmm.
downward force in 3
Mm-hmm.
minute, 5 minute, and after that 15-minute candle also.
Mm-hmm.
So you have a big area. So you can
Yes.
s- at that time you can go short, or you have, what I want to ask is contrarian in trade.
Yes, I
When
got it. So this is a daily time frame and 75-minute, which is in uptrend. Price has gone up nicely. This is upswing. Now this upswing is
mature
broken.
uptrend.
Mature uptrend is different thing, and
No, sir,
upswing
means
is different
around
thing.
around 40, 50 say, candles of daily and 75-minute candle is showing bullish move, and then
Okay.
suddenly you see force, means large
Yes.
volume with big body
Yes.
candle in 3 minutes,
Yes.
5 minute, and 15-minute time frame.
Yes.
Then you can sort.
Yes. Yes. So that's what I was going to explain. So this is uptrend on daily and 75-minute time frame. Prices are moving higher, and this upswing has happened on this time frame, maybe 6, 7 candles or 10 candles on upside. Then it went slightly sideways, maybe 1 or 2 days consolidation on this time frame, daily time frame, and then there is a force on downside
No,
on
sir,
15-minute
I'm
time frame.
asking no consolidation. Uh, Only sudden you see a sudden force, downward force, or selling. Sudden
So,
selling is started.
so what you are saying is on 15-minute also there will be strong uptrend initially, and then sudden strong down move, right?
Yeah, that's what I'm asking. And there is support
Yes.
at very low level.
So I have explained this in the tape reading course, that when there is a strong up move and first time the selling appears, don't go short in this. Wait
Okay.
for second time red, and if this happens, only then go for shorting opportunities. If there is first time red, what you can do is exit your current position. Don't go short.
But
Sometimes
that
it
is
goes
that
on
is
creates.
regular. That we discuss already on our course. That I know very well. But here
So
there is
this is the
very,
rule which I follow.
but there is a good force. You
Even then
this
I won't go short.
with big volume candle and big body candle, and
Whatever
already
happens, I will not short.
okay. Already strong bullish move is going on from
It's okay. See, what will happen? I will miss
so
the
support is
opportunity.
at very low level.
Yeah, what at the most I will miss the opportunity.
Okay, but don't short here. Short
Yeah, as I
only double
mentioned,
bottom.
even
Only double.
15, even this 15-minute time frame will show strong uptrend. And if it turns red, most of the times what I have seen is it goes up, gives us opportunity to short. Sometimes it breaks this, again creates new red candle. So either we can look to sell here or look to sell after second red. Don't short here.
How can we sort on the center one square where then there is all the time frame is showing green. This
See,
is first. Here I want to
this is
sort.
daily time frame. This is 15-minute time frame. On 15-minute time frame, it has turned red here.
Yeah,
Okay.
and then if it goes up, then again it will turn red. It will turn green.
Let me explain. So here it came down. So if it is going up, it's not up. This will not be green. This will be still red. Unless
Okay,
this is crossed, it will still be red.
okay,
So when it touches this selling area, at that time you can sell. Or here the 3 and 5 minute will also turn green. So let 3 or 5 minute turn green, red second time and then sell.
okay. Understood, sir.
At least something means there should be some retracement, there should be some pullback. If it comes down directly like this, it's okay. I will miss the
The
opportunity, but
the
I will
fo-
have to exit long
the
position.
force is important only for going in same direction, going with trend,
Yes.
not
So
opposite.
whatever happens after this, if the strong force appears and first red candle appears, I will exit just my long position. I will not take short immediately unless there is some consolidation, some sideways price action. I will not immediately take a short trade because it is very less likely that it will rise rapidly and it will fall rapidly. This happens only 20% of the times and it's very low probability trade for me.
Okay. Thank you, sir.
Yes. Any other questions or should we go to the charts? Force is not represented by RSI, or if it is represented, I don't know how to understand that based on RSI. I will show, let me share the slides. Yes. Prashant sir, you want to ask anything furthermore?
No, sir. By mistake, I have risen. Sorry, sir.
Okay, no problem. Joyita ma'am, you have any questions?
Sir,
Yes.
hello. Sir, in commodity trade, that you have told us to look for 4 hour chart, which is the higher trend, and 1 hour, and then 15
Yes.
minutes, 5 minutes, 3 minutes, right?
Yeah, 5 minute, 3 minute is too small a time frame for
Yeah.
commodity.
Yeah.
Don't go below 15 minutes.
Okay. The 4, 1, and 15.
Yes, yes.
This is 1 hour. Here, thank you so much.
Okay, ma'am. Ketal sir, you have a question?
Yes, sir. One thing you already clarified. The setup Dr. Prashant was describing was
Yes.
you already advised to use as a profit booking if we are in the trade rather than shorting.
Yes. Yes. Yes.
His previous question, he has asked that daily is uptrend. Next the morning there is gap down. So gap down opening we consider is a force against the trend. So why should we enter? We should wait for few candles more. But this is discretionary.
Yes. So this is a chart. Okay. This is uptrend on higher time frame. And on 15-minute time frame, this is a trend, and we expect prices to come down here in the buying area, right?
Hmm.
Now, as this is 15-minute time frame, sometimes there is no overnight price action. There may be some action like this, and suddenly there is a gap down opening here,
Okay.
and then prices do not come back; they go up immediately. So,
Okay.
as we are taking trade in direction of higher time frame trend, higher time frame is bullish, daily and 75-minute is bullish. On 15-minute, there is some gap down, and it is happening in the buying area.
Okay.
So that's why we are taking a trade. But if you want to do further more analysis, what you can see is on 1 minute there will be gap down, strong downward move, then prices go up, then there is a pullback like this, and then they start moving higher. So
Okay.
this happens most of the time on lower time frames.
Okay.
You can wait for this confirmation and after that take a trade.
Okay. Okay. So we can further analysis on shorter time frame.
Yes, yes.
Okay. Thank you.
But that can complicate the analysis furthermore, and it may hamper your entry also. So if it fits in your risk appetite on 15-minute, you can take entry immediately. And the more charts you see, more understanding you will develop that when the reversal happens and when it does not reverse. Okay, now let's check some charts. Yeah, Ketan sir, you have a question again?
Yes, sir.
Yes.
Now, regarding the choice of the option trade with this put, buying or selling, can you guide us? Because
Yeah, so we are going to see the
yeah,
charts and we'll discuss on that.
yeah, because we get stuck up at this now, we lose time, in intraday in deciding these option strikes and types because of
Yes, yes,
our
yes.
experience, and we lose
Yes,
the
yes.
trade. Yeah.
So we'll
Please,
check on the
please
charts.
move, yeah.
So this is a chart of Goldium. Can anyone tell me what is happening here?
There is double bottom formation on an uptrend chart, and there is a breakout just before few candles. And post breakout, it is sideways.
Where is double bottom formation?
So in the buying area, there are two bottom form.
Here?
The buying zone.
So this is the buying zone, lowermost buying zone.
The
upper
I
buying zone.
am describing the upper buying zone.
Upper buying zone.
Yeah.
This
The
one.
latest, yeah. So there are two.
So what I said is background condition is more important. We have to see
Okay.
that also. I want to understand how this move has happened.
Okay. So here the
Strong up.
from the downtrend, it has turned to green later, and that from second buying area, the force of impulse has developed. And
Second buying area. So this one.
yes,
And it has not given entry in this buying area.
yes, it did not give.
Yeah. So let me describe. Here the trend was bullish sideways, yellow color. There is some buying force here, some buying force here. This green arrow at the bottom is showing buying force. You can see the candle size is large here, candle size is large here. There is a hidden gap. Then prices went sideways, and then there is a sudden selling force. Once this selling force appeared, this buying area was broken, candle color turned to red. Okay, there is only one downside force. Again, there is a bullish force here. Again, there is a bullish force here. Even though prices are coming down, there is no selling force like this. And this selling force, how is it? It is with smaller candle as compared to these bullish candles, right? So the selling force appeared, trend changed to down, but selling force is not very strong. Therefore, even though prices came down, further selling force has not developed, and this is another buying force. So many people will say that this is a reversal. There is bullish engulf or something like that. This is a reversal, and sometimes it works, sometimes it doesn't work. But if this happens on background of lack of selling force, then it is good. If it happens on background of strong selling force, it will not work. Okay, there is buying force, there is buying force here. So what I have noticed is when there is a strong buying force, back to back, there is buying candle, again buying candle, not selling candle. And previous selling candle's high is broken. So this is the selling candle, its high is broken here. That means selling force has disappeared. Then again price came down because there was strong force. So most of the time prices come down below that. But when it is coming down, the selling force is not very strong. After this, buying force appeared, price went sideways, again buying force appeared. So when the buying force appears and selling forces are weak, after that strong moves are likely to happen. The trend changed here with a strong buying force. Buying area is created here. Price came down in buying area. How is this fall? Without any selling force, right? So this is a pullback action. This is impulse. This is pullback. We got nice retracement entry in the buying area. Stop loss can be below this or at the most below this. So this is big stop loss. It will increase probability of success. This is small stop loss. It will have smaller success rate, but risk reward will be much larger. We can use hybrid method. Keep a stop loss on crossing basis below this and closing basis below this. So if candle closes below this, exit, or if it crosses below this, exit. So GTT to exit can be placed below this, not below this. And if candle closes below this, exit. So this is entry. Next day prices went up immediately. Continuation formed. Again there is a retracement. How is this retracement? It did not touch the buying area. So there is only one buying opportunity here. Next time there is no buying opportunity. And then there is a strong buying force here. So this buying force has appeared with a gap up. There is a gap up open. Again there is a strong up move and there is a hidden gap with gap up. Now there are these circles which indicate that red candles are appearing, but there is no hidden gap. Then again strong buying force. So this candle is larger than average candle size and there is a hidden gap here. Again same large widespread candle with a hidden gap. So these hidden gaps are forming, widespread candles are forming, that is showing buying force is very strong. And then again there is buying force. Price came down without any hidden gaps. It gave retracement entry, it completed the target. What is the target? Its highest close. So this is the highest close, it completed the target. After that, when price came down, it came down with widespread candle and a hidden gap. Therefore, I said that prices most of the time or many times can go below this buying area also. Even though stop is not hit on closing basis, but prices went below this because there is a selling force here. So there was a selling force. After that, again bullish change appeared, price came down. Now this time prices came down, but if you see, this low is not broken here. There is no strong selling candle, and then again prices started moving higher. So with this we can understand that when prices start after a sideways move, there is a spring, there is a secondary test, there is a breakout, there is backup action, and this is phase E. So if you understand the schematic, you will know that it's always better to look for trades after confirmation of secondary test when prices start in phase D and phase E. So up to this it is phase D, here it is phase E, and prices went on strongly with creation of strong bullish candles, right?
Yeah.
So this is how strong bullish candles will appear. As long as low of bullish candle is not broken, we are safe and when low of bullish candle is broken and two strong down candles appear, only then force is significantly down to break buying areas and prices are likely to fall. But if there is only one selling candle, it is less harmful and it may not break or stop loss. So this is important. Two things to check: the direction for bullish move. Buying candles should be appearing with hidden gaps or visible gaps, and low of buying candles should be protected. If it is broken and there are two strong selling candles, then it is bad signal. If there is only one selling candle, it is not still not a bad signal. And please keep in mind that even if we can buy at this bottom, we cannot sell at this top. It's really difficult to do that. And even if we sell here, we'll be unhappy because prices are going higher. So it's never possible to capture the top or bottom. What best we can do is capture from here to here. That is also a good move. If we book here, that is also fine. If we book here, that is also fine. If we book here, that is also fine. Don't look to book profits at the top, or don't look to take entry at the bottom. If we want to take entry here, it may come up and again fall down. So hit the stop loss. See, this is another chart. What do we see here? Earlier, there is a very choppy price action. There is this strong candle. There is this buying area. Again, continuation formed. There will be this buying area. And before coming down to that buying area, what happened? There is a strong down force. So this entry has not worked and it has hit the stop loss. It hit the stop loss and came down in this buying area all the way down here with strong selling candles. So as there are strong selling candles, I won't look to buy in this buying area. My opportunity has come again here when there is a uptrend with strong bullish candles and retracement without any strong bearish candle. Right? So this has given me better opportunity to buy with small stop loss, and relatively price has moved strongly. And if you see, there are no downside candles anywhere in this up move. There are many strong bearish candles here, but there are no strong down candles. Only one candle here. Second candle did not appear, but this is after our entry. Our stop loss is here. We have taken entry. There is no strong down candle. This candle is worrisome candle, but it has not broken the stop loss, so we are safe. So this is how we can combine trend and force. This is retracement. Is it easy to see this pullback now? Gurdeep sir, you had a question how to see the pullback? Yes, Ketan sir?
So this was regarding the pullback entry on retracement. And
Yes.
Can you please show some breakout entries or momentum entries?
Breakout entries or momentum entries are these. So whenever there is a strong bullish candle, we can buy after that.
Okay. Once there is a change printed, then only.
Yeah. So in previous chart, I will show you just a minute. This will be breakout entry. As per phase analysis, sorry. This is sideways price action. This is spring. This is secondary test. After this is sign of strength candle. And I have told you that this is our breakout entry or pre-breakout entry. After that, price again came down. Then this will be another entry. This will be another breakout entry here.
So whenever
There are multiple breakout entries here.
Whenever there is printing of a change, we can or continuation, we can go for a breakout entry.
Yes, yes. Now see, this is another chart where we can easily see prices started moving higher. Strong bullish candles. There was down candle, strong bearish candle. This was broken here. After that, next bullish candle appeared, and then there is no bearish candle till here. This is the first bearish candle, and second bearish candle did not appear. So as long as second bearish candle did not appear in succession, it is still safe to hold on. Then again, there are two bullish candles, and this is first and this is second bearish candle. So once second bearish candle appears, this is first, this is second. In between, there is no strong bullish candle. So there are two in succession. This is confirmed here with black candle. We can exit in black candle. So even if we exit here in black candle, we are exiting around 1000 level. Price came down up to 800 level. 20% fall from that level also. And then when bullish change appeared, we can look to buy. So there is a strong downward force. As I mentioned, if there is strong downward force, it can go up, but significant up move does not start immediately. Then there is this pullback action. So this pullback action can be your opportunity to take entry. Okay, this will be confirmation entry. So when the strong force is present and trend is present, opposing candles do not appear immediately. And two back-to-back candles. As I have said multiple times, two factors are very necessary to confirm any trend. So here, what are those two factors? Break of bullish candles low. So this low is broken here, and two downward candles. So once this downward candle is printed, only then we'll be able to understand that trend is down. And this downward candle arrow is seen here, but the confirmation is on close of this candle. So this is the level where one can exit. Or next day there is black candle, again red candle. So one can exit here. Even this exit is fine. If you have taken opportunity to buy here, this is a good move. Many people feel that I want to buy here and I want to exit at this top. It's not possible. Not possible even for market makers. Okay. This is another chart. What do we see here? There is a strong up move. Then again, we can see bullish change. There is some buying area, but in this buying area, what happened? Price opened, gap down, and it is too deep open. It's not opening at the top, it's opening in middle. There was slight reaction, but after that, price fell again. So there is a strong down force. Before that, what happened? There is a downward force here at top also. So there is a strong downward force at top, and then there is a gap down open in our buying area. So as there is a strong downward force before and giving opportunity to buy in our buying area, as force is down, strongly down, what I said, it is likely to come down again. So I will wait for confirmation entry. There is no confirmation, I will not take entry. So this will save some opportunities or some losses. Here we can look to buy as there is strong bullish change. Force is down, down force is not strong. We can look to buy. If the stop is hit, okay, it's okay because we are following some rules and we cannot be right 100%. All the time we cannot be right. Okay. So any confusion in this now? See again, we can.
Would you have shorted at that strong gap down?
No.
Okay, so you would have waited for second red.
Yeah, either I will wait for second red or I will wait for my price to come in the selling area. So even though prices have come down up to this, I will plot 50% retracement from here to here. And once
Okay.
prices are above that 50% area, in this area, only then I will look to short if there is appropriate opportunity. And this is daily chart, so I can go to 75-minute or 15-minute chart in this area. If there is opportunity to sell, I will sell. Otherwise, I will let it go.
Okay.
In this gap down, it's not possible to sell because there is big gap down. My stop loss is sitting way too high. Risk reward is not comfortable for me.
You have to unmute Hetal.
Now again here we can see The color of trend has changed, but there is no force on downside. All the bullish candles have force. There is only one candle on downside. Second candle in succession has not appeared, and therefore it has not gone into downtrend. Right? And again, uptrend started. So if we combine both the things, we can hold on to some of our trades. We can book partial profit here and wait for this level to get broken or second forceful candle to appear. This way we can wait and watch. See here, when the trend was down, the forceful candles are on downside. So it works on both sides, downtrend as well as uptrend. Forceful candles, forceful candle, downside, 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 downside. Only one bullish forceful candle. There is no back-to-back second candle. Prices fell down again. And then there are strong bullish candles appearing here. And the trend changed. So it came down, gave retracement entry, and then it's going higher. So this can be a double bottom formation, or it can also be a schematic sideways price action. This is spring, this is secondary test, and after that, one can look to buy. Right? So have your pattern for entries also, and take entries based on those patterns and based on force, on trend. If you have 2 or 3 factors in your favor, there are lesser chances of success, failure, but the trades will be much lesser. And taking less number of trades is very good sign. You are taking only those trades which are strongly in your favor. Now here, what do we see? There is strong down candle, price came down, went up, again it went below this low here and here also. So when there is strong selling force, usually they are coming down below previous swing lows. Again, price went up with strong bullish force, back to back selling candles. The trend is up, but strong selling candles are appearing. Therefore, it is going below this buying area. Do you see this went below buying area? And if you keep the stop loss on closing basis, it hits. But later on, it started moving higher. Then there is lack of force on downside. So this has given good move. Then again, strong down force, but upward force is also appearing. So two back-to-back selling candles, but one strong bullish candle again. Strong selling candle, back-to-back two bullish candles. As soon as two back-to-back bullish candles appear and this selling candle's high is broken, even though trend is bullish side, bearish sideways, it went and changed to bullish because the bullish force is appearing here. Back to back, 1, 2, 3, 4 candles before after this red candle. So once we see that there are strong bullish candles and bearish candles high is broken, that means prices are showing force on upward move. Don't look to short. Even if you don't buy, this is okay, but don't look to short. Buying opportunity is here. Price went up, came down in 50% retracement. It does not come to buying area all the time. So this may be your opportunity to buy, and prices have gone up nicely. So this is how we check force. Okay. Any question about force? Now we can see that these candles which have these arrows, they are larger candles, and there are gaps after this candle, either visible gap or hidden gap. Here also larger candle, gap. Here we have strong bullish candle. There is a hidden gap here. There is a strong bullish candle. There is a hidden gap here. Some people call these candles as expansion candles. Some people call this as widespread candles. Name doesn't matter. The candle size is strong. It is closing near top. So price action matters. They are strongly bullish candles. Okay. Any questions in this? If there are no questions, then we can go and discuss our options trades. Yes, Hetal sir.
Show us some examples of 2 time frames, higher and lower.
Yes, we are going to that now.
Sir, in this Zen technology, suppose we have entered at second green
Okay.
and
Second green means here
previously when
previously. So this is
sideway,
first green, this is second green. You mean to
Yeah,
say you have
yeah.
entered here. Yes.
so our stop loss on
It will
closing
be
basis.
candle close below this
uh,
or crossing below this.
hmm. Okay, suppose we have kept that first one as a stop loss, but at red candle with such big gaps visible and we have to exit.
See, this is not a very big stop loss.
Hmm.
We'll have to wait for candle closing below this.
Hmm.
Right?
Hmm.
If there is a big difference, suppose they are appearing here and our stop loss is below this, then we can exit here. We'll be having some profit. And if it comes down, we can take re-entry. This is already near the stop loss. So
Okay.
just don't wait, means don't try to save suppose 10, 20 points when your stop loss is, for example, if it is 100 points
Hmm.
and you want to save 10 points. It's not good idea.
Hmm.
Let it take the stop loss, only after that exit.
Okay. Suppose we are in the trade and in May it has turned red. So it is time to exit.
Yeah, this is the time to exit.
So
Because there is strong selling candle also, buying area is also broken.
so we are out of the trade and then there is a next very strong move. So where will
Yes.
we re-enter?
So in this re-entry can be, see, this is a bullish change. There are strong bullish candles. We can take entry in this green candle itself or in this green candle, or we can take retracement entry in this. From here to here, it will be 50%. It is less likely to come to this buying area. So it came 50 to 60% retracement has happened. If you check, most likely it is likely to be in 60% retracement. So you can buy here immediately, or after this, when prices come down, you will get I start entry here. There are multiple opportunities to enter.
Okay. Okay.
You can take retracement entry, you can take confirmation entry, higher swing low form, you can buy at that level.
Okay. Thank you.
Any other questions? So we have discussed I start entries in your mentorship program. We have discussed about intermediate low, higher intermediate low formation. Here, this is our low formation, and there higher intermediate low formation will be confirmed somewhere here. That time also we can buy. So there is I start entry here itself. We can buy here at gap up open price crossing high. That time also we can buy before formation of strong bullish candle. Multiple opportunities are possible. Okay, now let's go to multi-time frame analysis. This is first trade, and I had shared this on Monday, 16 December in our 3D course group, that I had bought 24,750 put at 155, booked some at 172. I had placed order to book at 190 but cancelled, and then later on booked remaining position at 242, and trailing stop loss was at 200. Okay, so how was this trade planned? This was the chart on 15-minute. What was seen here? Strongly up move, a strong up move was seen. So this is bullish change here, and strong bearish candle was visible on 15-minute chart. So this is strong bearish candle. Now what am I expecting here? That prices are likely to come to this buying area, 24,280, as there is this first time green strong up move, and after that it is likely to retrace, right? Because prices do not move in one way up move. So when prices go up, they are likely to retrace. So if they are likely to retrace, when can I look for a trading opportunity? There is a strong selling candle seen here. See, widespread bearish candle. The candle color will be red on normal chart. As this is tapering tool, it is showing green candle. On normal chart, it will be red candle. This opened here, closed at bottom. So strongly bearish candle. And in next candle, there is a hidden gap also. So this indicated that selling force is appearing and it is in selling area of 15 minutes. Some previous selling area is seen. This selling area is less likely to get respected, but I am expecting prices to retrace and give me a buying opportunity. So therefore, I was looking to sell short. Now, if I want to sell short, I said I will sell only in the selling area. This is the selling area printed on 5-minute chart. This is 9:45 candle. So 9:45 candle closes at 9:50 and I have taken entry. Say this is 9:50, 31 seconds. So 9 o'clock, 50 minutes when that candle closed, 5-minute candle closed. After that, I bought immediately and my stop loss was above this because there are two strong down candles and I am expecting prices to at least come in this buying area. Trend is down here, so I'm expecting prices to come up to this area at least on 5-minute chart. So if my stop loss is here, entry is here. Is this a good trade with risk reward?
Yeah.
So here risk reward was in my favor, even though probability is slightly lower, but risk reward was strongly in my favor. Therefore, I was willing to take my opportunity. And what is happening here? The force was also down. So buying candle, the buying candle low has broken, two selling candles have appeared. And here again it is coming to selling area. Though there is some buying force here, it's okay for me if the stop is hit. But I want to take this opportunity because my higher time frame analysis is probability of coming down in buying area of higher time frame. So retracement is likely and 5-minute has turned down already. So I took this opportunity to buy the put. Now let's go to next chart. So this was the chart of put. Actually, I did not take screenshot of that chart, but buying area will be somewhere here for puts. And there is strong up move. This came down, but here we are able to see VIX at bottom. So there is not lot of selling. And I had kept stop loss below this. I bought somewhere here. And first target was around 190, which is here. 177, 190. See, this is 190. This was my first target. But as prices were not moving appropriately, I exited some position at 172 and made my stop loss below this. Just below this. And then it went nicely. I had kept target at around 240. It reached buying area around 250, buying area on underlying. And at that time, my target was so partial exit happened here and my trailing stop loss was kept around 200. Somewhere here, my remaining position got exited. So this is how multi-time frame analysis was done. And based on that, or based on my anticipation that prices are likely to retrace, I took a shorting opportunity. Then there was second trade. Here what I did, I had bought 24,500 put at 141 and exited at 180. On this day, what happened? I had bought at 1-minute selling area. So I bought put. Price went in 1-minute selling area. At that time, I bought put and I planned to buy again when prices fall below this. At that time, I wanted to buy further more puts and I had placed order to buy more puts. But that order was not executed. So here my stop loss was small and 141 was my entry. I don't remember exact level, but probably 160 or 165 was the level of breakout. What I did was I kept entry at 165 with trigger at 165. So trigger was same and entry was same. Once this triggered, prices rise immediately. It did not test 165, therefore I did not get entry again at this breakout level. If I had kept it to 166 or higher than 165, I would have got the entry. So this entry opportunity was missed, second addition opportunity. But I had already kept this target of 180 because when move happens rapidly, then this will have given me profit, and then retracement entry would have given me opportunity to buy again with some profit cushion. So that way I had planned my trade. But as this entry did not happen, this made me exit my full position, and I did not take trade again on that day. So let's go and check the charts. This was the chart of 15-minute. There were strong bearish candles. We can see one strong bearish candle, second, third, fourth. There are strong 4 back-to-back bearish candles, and prices are coming down. Where are they coming down? This is 5-minute area, 5-minute chart. On 5-minute, what do we see? The trend is down, and it is in the buying area of 5-minute. But I have said multiple times that if the trend on current time frame is not in your favor, then if the trend is down, buying area will disappear. Do we see any buying area here on 15-minute time frame? It's down. So 5-minute area is less likely to get respected. It is likely to get broken. Therefore, I was willing to take breakdown trade here, and I was willing to take shorting opportunity even at this level. What I did, I checked 3-minute chart. Here also we did not have any opportunity to sell immediately, or neither there was an opportunity to buy. On 1-minute chart, I checked this. At 10 o'clock, prices reached here and went in the selling area. There is strong down move. 3-minute, 5-minute, both are bearish. 15-minute buying area is down. And I am expecting buying area of 3-minute, 5-minute to get broken because trend is down on that time frame. So I relied on this. I took opportunity to buy put here, sell or buy put here. It was shorting trade. Stop loss was above this. It was very small stop loss. So it was okay for me. I bought put with this as my stop loss on closing basis of 1-minute chart. So if this stop had hit, I would have got opportunity to sell in 3 or 5 minutes. And after this, prices kept on falling up to this. See, there was 210 points move even after this. This was the opportunity around 24,519.20. It came up to 24,390. Price broke down, came up to this area. And then this was the options chart. I had bought here in this candle around 146 or something, 142, and I had exited at 180 in this candle immediately on breakout. And it closed around 200 here. So I had this trade. Okay. Any question in these trades?
No.
This was how multiple time frame analysis was done. Then this is third trade. This was taken in Bank Nifty call, and this was on 19 December. 19 December 2024 means this Thursday's trade. What was the trade? I had bought at 510. First exit was at 535. My stop loss was around 485. Second exit at 559 and trailing stop loss at 513. This was just 1 hour and 2 hour trade. This was based on 1 minute time frame, not higher. Higher time frames were not supporting, but 1 minute time frame was supporting. See, this was the chart. 15-minute. As I said that prices are likely to fall below the buying area. What happened here? Force is down, therefore price went below the buying area and it's not closing below this. Therefore, I thought of buying and going long in Bank Nifty. But the force and trend on lower time frames was not favorable. Here, I took opportunity to buy here in this candle, 1159. See, this was a buying area. I will show you timing of this trade. Entry is 1159. See this. So this is this chart. There was strong up move in option. This was call. There was very rapid strong up move. This was the buying area around 510 and stop loss was around 485. So I bought here at around 510.6 and my first target was just 1 hour. 510 minus 585 is 25 rupees. So I added 35, added 25 here. 535 was first stop entry target. 565 was 560 was second target. And then trailing stop loss. So this way I took the trade and exited it. Okay. Yes, Etal sir, you have a question?
Sir, this is option strategy. Can you show multi-time frame in for case delivery in stocks?
Yeah, we'll go to charts.
Okay.
Well, yeah. So that's all about what we had for on the agenda for today. And these are the trades which I have taken. I have shown you force. I have shown you trend. Just a minute. Okay. Now this force is visible on our price action toolkit. The yellow candles, if you see the yellow candles, they are the widespread candles. And if there is a hidden gap after that, that will be a forceful candle. Right? So Vikram sir, the indicator is already with you. You just need to understand these candles. They are forceful candles. When there is a widespread candle or SOS candle, these are the candles which are forceful candles. When they are associated with hidden gaps. I have already told you when there are two back-to-back SOW candles or when there are widespread candles. These are bad things when they are appearing on downside. And if they are bullish, then they are strong candles. Yes. Ketan sir, you have a question?
Yes, sir. In this last Bank Nifty call trade, on
Yes.
15 minutes, it was a very strong downfalling. Then
Yes.
also you took a contrarian trade.
Yeah, so as I explained, let me just a minute. So this is the chart of option and this is Bank Nifty chart, right?
Yes, yes. This was a very strong downfalling for last two swings. I mean, two.
Yes. So what is the trend here? Bullish sideways.
Yes.
The force is down,
Yes.
but it's not able to close below the buying area. As it is not closing below the buying area, then I expect that price can again go up.
Okay. Okay. Okay.
If
And
it had closed below this buying area, then I would have not taken the trade. This is the doji candle. There is rejection at bottom.
Mm-hmm.
I waited up to 11:45. This is 11:45 candle.
Okay.
And after that, what do we see? There is a strong up move in call. So this suggested that somebody is buying, and if they are buying, there must be some reason to buy.
Right.
And we are in buying area of 15-minute chart. Therefore, I took the opportunity. If I had, means if the up move has started here, if the up move started here, what would have happened? It could have gone up very nicely. See, this is 52,300 level and 52,500 is here. Even if it could have gone up to 800 levels, it is 400 to 500 points more.
Yeah.
So in this, with stop loss of just 35 points, if 400 point move happens, at least call option will increase by 250 to 300 rupees, right?
Mm.
That could have been a big win for me.
Mm.
and it was a very small risk. So it is worth taking it.
Okay. And then ultimately it fell down because of that higher force on 15 minutes. The
Yes,
second
it could not bring the force, so it fell down. And my trailing stop loss was intact. So I had exited in profit.
Barabar.
And because I was not expecting it to keep on rising very fast,
Hmm.
because the force was down, I was taking a chance. Therefore, I had
There
kept
was
partial
a
booking.
target-based contrarian trade.
Yes, yes.
Okay.
And let the small position run. If it runs, we can
Yes.
get a big profit on small position.
Yes, yes.
But when we are taking the trade in direction of the trend, then we don't need to book at some specific target.
Barabar.
Multiple bookings are not required. Just trailing stop loss can give us big rewards.
Okay. Thank you.
Okay. So with this, wanted to is my chart visible?
No, sir.
Just I wanted to announce my next course, but maybe it's not right time. It's already 11:40. I'll have some at next opportunity. I will explain about the course. But the next course is starting from second Sunday of January. So it will be starting from 12th January. I'll share the details in PDF format. Please share with your groups, with your friends. And what do you want to know about multi-time frame analysis, sir, for investment purpose?
Cash trading.
Cash trading, multi-time frame analysis. So it's something similar. See, this is a chart of Zota. And what do we see here? There is a buying area here. This buying area is printed here. And there is this buying area printed here. We'll go to this one and check what is happening on multi-time frame. This is our buying area. Weekly chart is showing uptrend, and this is 592.5, which is our entry area for investment purpose. If we go to daily chart, what do we see? This is the area of and when prices are coming to this buying area, there is a and wait for opportunity to buy. Price came down in the buying area. Just wait because it is likely to come down further. It came down below this with strong bearish force. So it has come down below with strong bearish force. We can wait for confirmation. Price went up. Again, it came down with strong bearish force. And ultimately, as I had mentioned that when this thing happens, mostly the buying prices go below buying area. When there is this candle, it is going below buying area, and then it closed above this here. At that time, we can take a confirmation entry because this is a buying area of daily time frame inside the buying area of weekly time frame. So price came in buying area, came down, and again when it left this buying area, went above. At that time, we can buy here and keep stop loss below this. So that is how we can use multi-time frame area, multi-time frame analysis, and understanding the forces. Let us see some other chart also again. Uh, so this is some Asian energy chart. Let's check it here. Okay. It created a bullish change from here. It has not come into 50% retracement area. And if we check on daily chart, what happened? went up again, created a continuation, gave retracement entry in this buying area. So if our bias is bullish, we could have bought on 15 daily chart here in the buying area with stop loss below this on closing basis. As price did not close below this, it was a valid trade. Let's see if we get any other opportunity to buy. As once the bias is bullish, see here it has given opportunity to buy. There was strong up move. Price came down in the buying area and then it went up, started moving. Again, it has given multiple opportunities to buy. And see here the strong selling force is present. And what happens next is prices came below this candle. So if you want to buy in buying area and there is a strong selling force when prices are coming in buying area, this method can be used. Keep entry below this and keep stop loss on closing basis below the buying area. This can be used as a GTT entry. This is one possibility. So this was initial buying area, it gave retracement entry. After that again here there is continuation, price came in this buying area, it gave retracement entry. If you want to see the buying area, I will have to increase the number of boxes. It's getting processed, it will come. So it created a buying area, price came down in buying area, gave entry. As it is coming down with gap downs, see again went up slightly, came down below this low. So this happens very often. Prices come down below the low if there is strong selling force. Again, see there is continuation, price came in buying area. So higher time frame bias or weekly time frame bias is bullish. We can look for retracement entry in the buying areas. Okay. Here it went sideways and then again new buying opportunity appeared here. This way you can check on multi-time frame. See, this has given opportunity to buy on weekly chart. See, there is very strong force downside. Price went up, came down again below this, but it did not close below weekly buying area. And afterwards it went up. So therefore, when there is a strong force, price is coming in buying area and with a strong down force, it is likely to go below this. Don't keep stop loss just below this low. As long as this high is not broken, it is likely to come below this low. Let's check chart of Nifty. What do we see on Nifty? On weekly chart,
Uptrend.
uptrend and force.
There's a down force. There are two down candles with force.
So this is strongly bearish, this is strongly bearish,
Yeah.
and I will show you this one.
Yeah.
This is also strongly bearish.
Yeah. So
As
three-
long as next week the prices if prices remain below 24,180,
Mhm.
if by next Friday prices are not able to cross 24,180, then this will also print a red down arrow.
Yeah.
And if that happens, then it can break down below this low. It
Yeah.
can come to weekly buying area also, or it can come down somewhere here also. Let us see on daily chart. What do we see on daily chart? This is the buying area. So if this buying area is broken, then next is here. So
22,000.
prices can come up to 22,000. But will it come down directly like this?
No.
We can't say that it will come or it will not come. It's possible that it may go up, give retracement, and again it may fall. Or it can continue falling downwards.
Hmm.
It's not in our hand. What is in our hand, we can trade based on our entry setup. If we get a good setup, we can take a trade in that direction. Now see here, there are this strongly bearish candle, this strongly bearish candle, this bullish candle low was broken. So after this, there is so much fall. And there is no strong bullish candle. There are only rapid downward candles, big down candles. Only here we have two back-to-back bullish candles, but again, bearish candles have appeared. And next bearish candle, if this forms a bearish candle, it is suggestive of strong down force. Prices are definitely are more likely to fall below this buying area again because there is a strong down force. Yes, Ketan sir, you have a question?
Yes, sir. Looking to all these things, the most preferable area for entry would be sideways after downfall and then down to side and up. That area we need to catch amongst so many stocks. So we need some good screener which can give that area. Say Wyckofian phase D or E, early E.
So I had created a screener. I will show it to you.
So that is the only answer that we can have for so many stocks.
Yeah.
And some screener for keeping a shorter watch list also. Say suppose what sort of
So
smaller
this is the screener I have shared with you, the guys of mentorship group and those who have taken subscription on smaller time frames. So
yeah.
on this screener, what do we see? Fresh up, fresh down. And I had told you that these will show you fresh up or fresh down based on how many candle look back period we are keeping. So if
Okay.
I keep this as 11, means within last 11 days, either it has turned red or it has turned green. So this can help you in keeping a shorter watch list. Just go through these stocks. Now this is
We
BSOFT.
can keep instead of 11, we can keep say 30 candles so that
Yes, yes. So
fresh
that
up
is
will
modifiable. You can modify as per your own method or your own thinking and just check that. So BSOFT. First we'll check chart of BSOFT. Say BSOFT has turned green here.
in last
Now,
11 days.
yes. So
No.
within 11 days, it has turned green. Now, what is happening to BSOFT? It is coming down in the buying area. This is our buying area. Yes.
Yes,
So
yes.
you can keep this in your watch list. It's not a problem.
Okay.
And how is it coming down? There is a strong candle, bearish candle. This is strong bearish candle. If there is a hidden gap, then what will happen?
We'll wait for
There will be a downward arrow here.
yeah.
So it will show selling pressure. So we can wait for selling pressure to reduce before taking entry, the confirmation entry.
Or on a higher time frame, it is green, then we can confidently take that entry.
So this is the time frame or daily time frame. It is higher time frame. It has turned green here itself and it is coming down for retracement. If you take it immediately, then you will have to wait and you may face some drawdowns also. Therefore, what I will do is I will wait for at least on smaller time frame to have some confirmation.
Yes.
And if there is no hidden gap here, then it's not a problem. This selling candle is a fake selling candle. Whenever it touches, I will have to check tomorrow's candle. If tomorrow it comes down directly, I will not buy immediately because there is strong selling pressure. Unless this level is touched again, there is some selling pressure. So there is imbalance on downside, prices are falling rapidly. It can come down, it can go up again and fall below this. So what I will do is, suppose if it does not go up to this area and it comes down in the buying area here, I will show you how I think. This is a path. From here, if it immediately comes down and there is a hidden gap here, what I expect is prices will go up here, then again it will come down, and if it is coming down with smaller, weaker force, then it will go up like this.
Okay.
So this will be my anticipation. And if it goes up here and then comes down, then we can buy immediately, it can go upward. If I want to wait, I will wait for double bottom formation or some kind of pattern formation before taking entry. If I plot a schematic, this is my selling climax, this is my spring, secondary test has happened, maybe one more secondary test is happening here, and I can look to buy again. So schematic also confirms my my bias. There is selling climax, strong AR, secondary test. So I can expect prices, if they are coming down here, I can expect prices to come here at least. So this provides me good risk reward opportunity, then I can go for it without thinking twice. But
Sir,
if the risk reward is not favorable, we should avoid it.
So here we should keep the target as the bottom of that selling area, or bottom of that immediate selling area, or bottom of the
If favorable price action develops, then
Yes.
all these selling areas are useless,
okay. So it
because
depends
already
on the
one
force.
selling area has disappeared. There was a selling area somewhere here.
Yes.
That selling area has already disappeared with this candle. So these selling areas are not for profit booking. They are likely to get taken away. Price if comes down and reverses, it will break above these highs.
So we need to keep targets in that case, because it will be then a trend following situation.
So if you are willing to follow the trend, just don't keep the target. If you want to take book profits at target, you can keep at this level, at this level. So you can keep multiple
Okay.
targets, one at this, one at this. These selling areas can be your initial targets.
Okay, sir. For partial profit booking, we may keep it. Yeah.
Yes, yes.
Okay, got it. And according to you, sir, for such type of schematics, Wyckofian D and E, it is 11 days is enough for almost all the most of the stock, or do we keep it for longer time?
It's okay. 11 days is fine because you keep on watching your list regularly. So
Weekly,
just run a screener once, you will get the list of names which have come in last 11 days. So every 11 days you can run the screener once again and check the list and create new watch list.
Okay, okay, sir. Thank you.
Okay. Don't keep it above 20. It's not required. 11, 15, 20 at the most. And then screen them manually also and make your own list. Okay. So
Sir,
does
excuse me,
just a
sir.
minute. Akshay sir, there are some questions in chat box. Let me check them.
Yeah.
Does your indicator also show liquidity sweeps? Liquidity sweeps, I don't use them. It does not show it. This greener is not working in free version of Trading View, even in short time frame. Anand sir, I will have to check your chart. Please send me the screenshot on my number. I will check it. Trading View indicator name. So this is my personally developed indicator. It is called as tape reading tool. It's not available on charts or it's not available. This force candle, it is also these red candles or green, red or green arrows. This is my personally developed indicator. And this is super advanced theater. It is also my personally developed indicator. and it is available for subscription basis. Yes, Akshay sir, you have a question?
Yeah. Can you just show me again how to get those multiple screener indicators, like how to copy and change the name?
Yes.
Yeah. The procedure, how to get it.
Yes.
Yeah.
So this is the screener. Okay, you have the screener.
What is the name of that? Updated super.
You will have to check it in your invite only section.
Invite.
Once
Yeah.
you click here, this is invite only section. Here you will be able to see the screener name. Okay,
Okay.
and I have shared the name also.
Yeah.
So this is the screener. Here, what you have to do is click on these three dots, click on copy, and then just paste Control V, Control V. If you are using Windows. So this way I have added it 6 times.
Right.
Now all these have appeared at
Yes.
same location.
Right.
Next thing is to change the location. You can change the location from here. This size, location, top right, top left. Then middle right. Then this will go to middle left. This way, change location for and bottom left.
Left. Yeah. Okay.
Yes. So this way, we have to change the location.
Yeah.
There is some error here. Let me check what is the error.
So the
Sometimes
process-
this happens. There is an error, runtime error, calculation timed out. So just close it and
And
press Ctrl Z. Or there is this undo tab. It will appear. Now it is working.
Okay.
Now all the names are same because we
Yeah.
have
To change
copied
the-
and pasted.
Yeah.
Now what we can do is go to properties of these individual indicators. So either double click on this and this will appear, or go here, click on the setting, and there are names here.
So you change the names manually.
Yes. So click here and change the name manually.
Okay.
Keep the list of names in sequence before doing this. Otherwise, you will be ending up in adding this haphazardly.
Yeah.
Okay. So add this manually, change the names. Once all the names are changed, then here do you see this indicator template?
Yes.
Click here and save indicator template. When we click on save indicator template, it will ask name of the template. You can save the name of this template as per your wish. If you want to remember the symbol, select this. If you want to remember the interval, select this. So this is on daily time frame. If I select remember the interval and save this, then it will always open on daily chart. Even if I have opening a 5-minute chart and click on this template, it will open with a daily time frame. If I remember the symbol, then it will always open with same symbol. So symbol is not necessary, but you can remember the interval. And all these 6 will be saved as a template. Now I have multiple saved templates, so therefore I am not going to save this. See this, I am opening previous template and previous template is opening. Now if I press Ctrl Z, back to this. If I open this is another template. See, all the indicators have appeared. Now there is this error. What is the error? Invalid symbol. That means there is one symbol which does not exist. Its name has changed. So here we can go to the list and change that symbol. If you know the symbol name, it's good. If you don't know, what you have to do is click on each name. If it is appearing here, then it is available. And if it is not appearing in the list, see IDFC, it's not appearing. NSE. That's BSC. So IDFC is not appearing, therefore it is invalid symbol. If I add BSC instead of that, then it will work. See, it's working now, it will change, and it has come now. So
Okay.
there will be some errors like this, you will have to tackle them. Yes, Ketan sir, you have a question?
So this F and D, there. So F is one template where there are 6 screeners. D is one template where there are 6 screeners, that way, right?
Yeah, all those are names of the templates which I have said, and it is first letter of the name which I have said. So this is restricted use, my swings, dashboard, star. So these are first letters of those names.
Okay.
Yes.
Thank you. Thank you, sir.
Yeah, thanks. Now TV charts do not make a combined option chart. I think there is a issue of making combined option chart because they have changed how we enter the symbols. But I will have to check a way out for that. And Kishore sir, what is the subscription charge in TradingView? So this indicator, there are multiple choices available. I give it for investors on weekly time frame, for swing traders on daily time frame, and for regular traders who are looking for opportunities to trade in options, futures on smaller time frames or intraday time frames. They have different subscription. I will share the details in the group, or you can message me for details. So let us check the options combined premium chart, if it comes or not. What I will do is go to options, Nifty. Those who don't know how to open the options chart, see, click here, then click on options. When we click on options, then click on symbol again. It will show like this. It will show like a option chain. You can select expiry, month, expiry date. There are multiple choices available here in Nifty. Otherwise, in stocks, there will be only 3 choices, and Bank Nifty, there will be lesser choices. So this is, suppose you want to check for December expiry. Let me check. It has come like this. And it's not changing. So combined premium chart is not appearing. Earlier it was coming, now there is a problem. But anyways, I use it on Insta options, and that's good for me. Okay. Force candle indicator available on invite only. I have not sent it till now, but actually it's not required. Insta options, I had shown it last time. I will show it just a minute. It is also available on iCharts. Or it's available with Insta options. With Alice Blue account, it's free. Just a minute, give me 1 minute. I'm opening it. Okay, is this visible Insta options?
Yes, sir.
Okay. So here what do we see in Insta options? There is options data, there is strategy, and we have a combined premium chart. So we can select Nifty, Bank Nifty, whatever we want, and we can get the combined premium chart. Okay, Ketan sir? Okay, then should we end the session for today?
Yes, sir. Thank you. Thank you so much.
Yes, yes. Thank you. So, Ketan sir, if you want to see combined premium charts, as it's not appearing in this, maybe you will be able to see this in Insta options or iCharts. And I don't know about other brokers if they provide it or not, but maybe it is available with some others. Okay. Any other advantages? We can directly trade from that. We can create the order there and send the basket order immediately from there if it is connected to your broker. Entry orders can be from that, and I manage my trades of options from my the softwares which I have developed. So I use either set tool or that enhanced order management tool. Yes, orders can be given from Sensible also, but I don't use Sensible. Okay. Sell on buy option. Let me unmute everyone. If anyone wants to say anything, they can say. Just a minute. Participants allow unmute. Yes, Ketan sir, you can unmute and speak.
Yes, sir. Thank you. Thank you.
Yes, yes.
What now I have learned is that if we are trending, I mean, following the trend, and in the direction of the trend, there is a good force, then we can go for buy options, ATM or just light OTM. And if there is a contrarian trade or the force is not very much in favor, and we go target way, then we can go for sell OTM sell options. Is it okay, fine, sir, for beginners like us?
See, if the force is not in your favor and trend is
Contrary,
not in your favor, and if you go for option selling, it can give very big losses
okay.
because option buying has limited loss.
Okay.
And if trend is against you, force is against you, and you sell options as a contrarian trade, and the force continues on opposite side, what will happen? Instead
Yeah.
of taking a stop loss of 10 points, it can take a stop loss of 50 points.
So in which setup do you advise that we go for selling options? Because that gives us a good
So trend is in your favor, but force is not in your favor.
yeah, then only we can go.
Yes. Or force is in your favor, but trend is not in your favor.
One of the things. Yeah.
Yes. When both are in your favor, option buying will give you very good profits.
Okay.
But suppose you want to take a trade. Let me.
And also regarding the strike price choosing.
Yes, is the screen visible? Black screen.
Yes, sir.
Suppose this is your buying area. Okay. Prices have started coming down like this. Strong down move. Trend is in your favor. This is buying area.
Yeah.
So you can sell put below this, out of the money put.
Okay.
As trend is in your favor, the force is not in your favor. What do we expect? Prices are likely to go up. Again, it may come down, but it should go up. So if you have sold put here and it goes up and comes down again below this, still you will be in profit because you have sold option, which is out of the money. Force was stronger at this time when you sold. Now the force is weaker. That means volatility has reduced. So IV fall will reduce the premiums and some time decay will happen in this time. So option premium will fall.
Okay.
Both way you are making profit.
Okay.
Theta decay will happen, IV fall will happen. Even though price is at same level of entry, you are in profit because you sold out of the money option. But instead of this, if you buy option here, what will happen? There is strong down move. So option premium will have increased because IV is high. When it comes down again, IV has fallen, theta has given you decay. So this will be in loss.
Okay.
So when you are taking trade at initial stages, either force or trend is in your favor. That time you can go for option selling. Same thing for here. Prices have gone up strongly in selling area. You can look to sell call out of the money call. If it comes down, goes up again slowly, you will make profit. If it is not going up slowly, this will give losses. But if you have bought put here in strong rise, if it falls slowly, still you will be making losses. If it goes up, still you will be making losses because IV is falling.
Yeah, that is possible.
But if it falls strongly, trend has turned down and goes up slowly. At this time, if you buy put, trend is in your favor, force is in your favor. When it starts falling, the premiums will increase rapidly.
Okay.
If it keeps rising, premiums will fall, but they will fall slowly because IV has already fallen.
Got it.
Okay, fine. Any other questions? Okay, then we can call it a day.
Thank you, sir.
Thank you, everyone. A recording for this session will be available. You can go through it.
Okay, thank you.
Yes. Thanks, everyone. Bye bye.